been priced out for the most part. And now the concern is, how high is the Fed going to stay? And there, I would expect Chair Powell to essentially reiterate what he said about 4 weeks ago, which is that, the job isn't quite done yet. There's more inflation data coming between now and the end of the year. Unfortunately, I think we've had a good summer of inflation data. We're going to get a couple of more good reports, but I expect inflation to kind of pick up later on this year, which I think is going to potentially lead to another Fed hike, maybe by the tail end of this year.
Explain that a little more. Where do you see inflation starting to pick up? And even in the more immediate data expected next week, what are some of the shocks that investors are probably not accounting for right now?
Yeah, so look, I've been calling this kind of the summer of disinflation for some time because I expected the core to be printing closer to 0.2, which is what we've seen. Unfortunately, next week when we get the core PCE data, that super core, excluding housing, the core services ex housing, the Fed is most concerned about that. Well, that unfortunately looks like after a couple of good 0.2 numbers, it's going to double and pop to around 0.4%. Later on this year, even though we are getting disinflation in housing and somewhat in autos, we're going to get probably a turn in the core CPI to the point where the run rate goes from about 0.2 to 0.3 in Q4. So that's going to start, I think, with the October data that comes out after that November meeting. So the way I see it is, we're not quite there yet on inflation. The data has been encouraging, but what you heard Chair Powell say recently was we need to see it durably, sustainably, and credibly look like it's heading to target. And I don't think 3 or 4 months of 0.2s are really going to do it for the Fed just now. We've seen this before last summer, actually, before the core picked up again. So my feeling is that the inflation data isn't going to cooperate with them later in the year, and that's likely going to lead them to go one more time, probably in December.
Omer, what is your reaction to the Jason Furman point of view here that the Fed really should be carefully aiming for a higher target in inflation?
Yeah, look, I think there's some merit to what Jason's talking about. I think that's more of a long-term sort of plan for the Fed if they decide to do it eventually. Right now is obviously not the time when inflation, first of all, is just around core inflation is north of 4%. So talking about a 3% target and moving the goalpost at this moment, or even taking that under review right now, to me doesn't make any sense because ultimately, nothing stops you from eventually saying, well, why can't we go to 3.5% or 4%? So I think that really sort of would tarnish the Fed's credibility if they undertook anything like that anytime really in the near term, even within the next year or so, if they started looking at that. I really think that would be a pretty bad move. And you've heard Chair Powell say that, that is not under discussion. That's not something they plan on doing anytime soon.
All right, Omer, really appreciate your joining us. Omer Sharif is founder and president of Inflation Insights. We've got a lot more coming up here on Bloomberg Markets The Close. We're going to go live to Jackson Hole, check in with our experts on the ground for a preview of Fed Chair Jay Powell's highly anticipated speech on Friday morning.
And then we're going to talk about one of the most highly anticipated earnings reports of the year coming out after the bell today, what to watch, and the latest results from NVIDIA.
And Ed Tilly, chairman and CEO of Cboe Global Markets, will be dropping in to talk volatility. His take on how and why investors are increasing their use of VIX options. All that and more coming up. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
The countdown to Jackson Hole continues. The symposium is kicking off tomorrow with Fed Chair Jay Powell delivering his highly anticipated remarks on Friday at 10 a.m. New York time. Bloomberg economics and global policy correspondent Mike McKee is out in Wyoming. Mike, you look at some of the data that's been trickling out before Fed Chair Powell's speech, payroll revisions, PMI data, but is any of this really enough to move the needle?
No, not at all. And I think you look at what Omer just told you about how some of it is sentiment data, and we should expect some sort of deterioration in the economy and in sentiment with the Fed raising rates to where they are, and it's finally starting to bite those long and variable lags. But the Fed is looking at inflation, and also, as Omer said, inflation is still coming down. So for the moment, it isn't going to change their view of what's going to happen. And I expect that's going to be probably the central message from Jay Powell on Friday, that the Fed is going to be watching the data, that they have made progress. They aren't done yet. They'll leave rates high enough to bring inflation down, but give no hint as to whether they'll raise rates again or not.
So in other words, pretty consistent with everything we've heard from him and other Fed officials in recent weeks. Looking ahead, Mike, I wanted to get a sense from you, who else will be attending and what news they're likely to make. I heard that the BOJ governor may or may not be in attendance.
Well, he's scheduled to be here, and so we'll find out if he manages to make it. Of course, Christine Lagarde, the president of the ECB, and Ben Broadbent, the deputy governor of the Bank of England, are going to be here. Broadbent and Lagarde and Powell all have the same issue. How do you keep inflation going down? Kazuo Ueda from the Bank of Japan has the other issue. How do you keep inflation high, or at least at where it is now, because that's been their goal. But I imagine that there'll be a lot of focus on the three major central banks trying to bring inflation down and what their plans are to do that. We are all focused on Jay Powell, but the folks in Europe and in England will be caring about what their central bank presidents have to say.
Yeah, so plenty of news that could be made at the event. Of course, Jay Powell will do everything he can not to make too many headlines. Mike, really appreciate your joining us. Mike McKee out in Wyoming, and of course, we'll be checking in with him later on in the week as he brings us those interviews from Jackson Hole. Now, we look at what's happening today. Bonds are climbing around the world after the soft economic data, not just in the U.S., but in Europe as well, bolster bets that major central banks will pause their rate hikes. So let's bring in the man behind the Bloomberg Everything Risk newsletter, Ed Harrison. And Ed, you make an interesting point. Even though bonds are rallying today, what we've seen is this sell-off, and yields have been jumping. Yields are jumping in part because no one really sees a recession coming, but a sustained increase in yields may actually bring about a recession, right?
Yeah, that's exactly right. That's the ironic thing is that we're now at a point where so many people have thrown in the towel in the recession that we're seeing the back end of the curve steepen, and so we're seeing those yields go up. It's interesting, we're talking about Jackson Hole. One of the things to look out for is in the next SEP, the next Summary of Economic Projections, whether that last dot is at 2.5%, where it's been for a long time. That's anchoring these yields lower. If they start to move that number up, up, then it will give credence to the concept that, yes, the back end of the curve does need to go up. And, the question is, how far up will it go?
How far up and for how long? I think there's a question of the longer this goes on, how much does this anchor expectations for long-term yields moving higher and the ripple effects through other risk assets?
Right, yeah, and I think when you talk about other risk assets, I immediately think of credit and I think of equities, because obviously a lot of this is driven by the real yield. What we saw is the 10-year real yield went up to 2% over this week. It's backed off a little bit, but 2% is a level that is the highest that we've seen since we got into the zero rate environment in 2007. And so once we get into that level, then we're starting to look at moderately restrictive. That's what the Fed wants, obviously, but what's going to happen to those other assets, as you were saying, Sonali?
Right, and other rates start going up too. You make the point that mortgage rates, which are high now, could get higher still. I wanted to get from you a sense of what higher rates, higher persistent rates mean for banks, because we certainly saw a lot of concern about that play out in March, but that might just kind of be the beginning of it as well. We haven't seen the end of this. One thing you point out is that higher rates means more money for lenders. It can be inflationary too. Can you explain that?
Yeah, so I think that when we think of rate policy, we think of it as absolutely restrictive, but it's not. It's the fact that, some people are getting more money, some people are paying more money because credit, the price is going up. So if the long end of the curve is being held down, what that means is there's not a whole lot of credit distress, and we've seen that in spreads.
Yeah.
But at the same time, people are getting more money, especially if they're crowding into the front of the curve money market.
We haven't seen the distress. One of my favorite functions on the terminal is RATT Go, and you see the movement into the downgrades more than you do into the upgrades. And if things do get worse, how much room does Fed Chair Powell actually have to stem that distress?
That's a big question, and we don't know, and we don't know how quickly that's going to happen. One of the things that you were asking, Scarlett, I think is about the banks. I think there's where a nexus is, because when we think about distress, everyone's always been talking about commercial real estate. The banks, commercial real estate, credit distress will add a dimension to that whole banking system that we didn't have before. Before, it was just all about the rates. Add in commercial real estate, and then suddenly we're in a credit situation that is more interesting in terms of the end of cycle.
A lot messier, too.
Messy is right. Thanks to Bloomberg's Ed Harrison. We appreciated your time. Everything risk. Take an eye. So we're going to get more insight on the global currencies market next and why the dollar is feeling the pressure today. That's Mark McCormick, global head of FX at TD Securities, up next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
DOJ or other authorities.
Good faith
your accounting Britain's next.
Fed was going to keep rate while
This is a 3 as the economic picture does.
The BOK is getting ready to make a decision. And we just want to recap news that broke in the last hour. The Wagner mercenary group founder Yevgeny Prigozhin was listed among passengers on a private jet that crashed into Russia's Tver region today. This is according to Interfax, which cited Russia's aviation authority. All three pilots and 7 passengers aboard that plane were traveling from Moscow to St. Petersburg, and they're all dead, again, according to Russian media. There's no immediate confirmation that Prigozhin was actually on board the aircraft, but he was listed among the passengers on that jet. And of course, this happened almost 2 months after Prigozhin led a mutiny that was certainly a threat to President Vladimir Putin's power. So let's bring in Mark McCormick, global head of FX at TD Securities. And I know that you usually look at G10 currencies and major currencies, Mark, not so much the ruble, which really no one's really looking at much of these days. But do you see any effect in FX markets? Do you expect any effects in the FX market from this news?
No, I don't think so. It's as you mentioned too. It's August. It's summer liquidity. That's been a big challenge, I think, for investors to deal with, especially if you even look at the bond market moves. A lot of this is exaggerated because there's not a lot of people on desks. A lot of people are on holidays. So I would think in this context, like when you think about the ruble and you think about these general headlines, I don't think it's anything that's going to resonate very much with the ruble or the currency market in general, especially because it's still very early on and we don't know what geopolitical or other implications it might have.
Right. Do you expect to see any kind of movement, if not in the ruble, because again, not really traded, but in other EM currencies, China's yuan, for instance?
Absolutely not. I'd say yuan is kind of its own animal. It's actually the analysis that we've done. When you think about it, the most important component of what's going on in the yuan really relates to the domestic housing market. And you could kind of look at proxies like the real estate investments and real estate ETFs, and you can kind of look at how that's correlated with currencies. I would highlight as well that like even the impact of ruble into China has very little implications because the thing that we're focused on in China is really the real estate market. And I think that's the biggest driver of what we're seeing in markets right now.
You know, I'm thinking more about the emerging markets as well. And you think about this other headline that has crossed the terminal just before you had joined us, this idea that Venezuela and the U.S. are in talks over possible easing of sanctions. The U.S. wants Venezuela to hold a cleaner election in exchange. Do you see any read-through across the Bolivar or other LATAM currencies?
No, again, I don't think that these are. I think there's a lot of like micro headlines. They're kind of like they're interesting. They're topical. They provide a little bit of context for people to have discussions. But I think what's really happening in emerging markets especially if you look at LATAM, there's not a lot of idiosyncratic stories. A lot of them are linked to what's happening in the global economy, as I mentioned with China. The implications when you look at kind of the correlations of things that are happening in China with certain EM currencies, that's actually quite important for some of the LATAM currencies. When you think about Venezuela, it's really not a significant driver. It's, again, if we look at kind of the broader context of it, real rates, U.S. dollar, U.S. data, Fed impulse. And I'd also say the most important thing that's kind of happening behind the scenes, and it's caught everyone off guard the last couple of weeks, is the bearish steepening of the U.S. yield curve. I know a lot of people have been looking for steepeners this year, but it's the wrong steepener. So I think those kind of big macro drivers are really kind of engulfing all the local stories you would have in Venezuela or Russia or some of these other side pieces in EM. But EM, the interesting thing that I would highlight as well is if you look at EM equity performance ex-China, it's actually doing quite well relative to the underperformance in Chinese equities over the last couple of months.
Mark, we have to go back to the largest market in the world, the United States, indeed. And you look at the movements in the dollar and the Jackson Hole symposium ahead, the big Powell speech that's ahead of us. How do you think that the dollar story plays out through the rest of the year, especially relative to some of those broader macro headwinds that you're talking about?
Yeah, I think the rest of the year we're still bearish the dollar. I'd say the way the world's changed in the last couple of weeks is kind of our trading conviction on the dollar has been a little bit less bearish. Like, again, the big things that are happening and the bearish steepening of the U.S. yield curve, no one was really expecting that. And I think a lot of it came through some different pieces that link the world together. But the BOJ essentially moving again for the second time on yield curve control has opened up the term premium that you're seeing the back end of rates sell off. So I think that's having implications for global bond markets, particularly the U.S. The other thing is you've had this big amount of supply that's coming through in the U.S. side, and I think the world is kind of protesting U.S. debt a little bit. And then you take down the fact that the U.S. debt was downgraded. So you add those three components into a very illiquid market. And the other thing that's really working very well for the dollar right now is U.S. data is stronger. So we run all these different short-term data indicators that we look at that kind of groups economic data in, kind of a little bit more of trends rather than what we see every day on our Eco Bloomberg screen. But in any event, like what we're seeing is data is getting stronger in the U.S. And so that's helping the dollar. And it's been helping the dollar largely, again, because Chinese data has completely capitulated. And European data, as you saw this morning, the PMIs wobbled. So the macro story is, again, it's all year. It's been up and down, up and down, up and down, very inconsistent. The dollar is basically unchanged on the year. So for us, we still think we're going to be in a world where we don't see a global hard landing. We see China recover through the back half of this year. We're going to probably see more aggressive stimulus coming from Chinese policymakers.
Right.
That will help support the economy into next year, but that's bearish for the dollar, even though right now, like kind of the positioning and the tactical setup been a bit more bullish.
Okay, well, maybe we'll see that play out after we get past these thin trading conditions of the summer. Mark, really appreciate your joining us. Have a good rest of the summer. Mark McCormick is Global Head of FX at TD Securities. Taking a look at where things stand right now, we have a rally underway when you look at equities with the S&P 500 up by better than 1%. And of course, chip makers leading the way ahead of NVIDIA's earnings report at 4 p.m. After 4 p.m. today, a lot of expectation and hope built into that gain. From New York, this is Bloomberg.
And money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
This is Bloomberg Markets The Close. Let's get you a cross-asset check as we head towards the close of commodities markets. And we check in now with Bloomberg's Abigail Doolittle. Abigail.
So similar to stocks, Scarlett, we do have a rally for commodities. That Bloomberg commodity up about 0.7%. Before we look at what's working, which is basically everything but New York crude and natural gas. Crude oil down about 0.9%, and natural gas still down, as it seems as though some investors, traders think that the Australian LNG strike is close to a tipping point in terms of getting solved, so that 10% of the LNG supply won't be coming off of the market. As for what's working, well, silver is up for another day. It's up about 4% on the day, sharply higher. We also have copper up 1.25%. So a risk-on picture there in terms of Dr. Copper assessment, reassessment of the economy, again on this risk-on mood on the day. And then wheat up for a second day in a row. We haven't seen that for a while, up 2%. Corn also higher, up 2.1%. Overall, we do have some gains here for commodities.
All right. Thank you so much, Abigail, for giving us the rundown there. We want to return now to a developing story. Yevgeny Prigozhin was listed among the passengers on a private jet that crashed in Russia. Now, this is all according to local media, Interfax, which cites Russia's aviation authority. The White House says President Biden has been briefed about the reported crash. So let's check in now with Bloomberg Balance of Power co-host Anne-Marie Hordern with more. Can you give us a little more insight into how the White House is likely to respond once President Biden has spoken with his advisors?
Well, I imagine the White House wants to conduct their own investigation with their own intelligence to see exactly what happened. Right now, these are just reports coming from Russia's state news agencies, and they are citing these Russian authorities that this private jet has gone down, 10 individuals on it, and one of them seems to be Yevgeny Prigozhin, of course, the mercenary leader of Wagner Group. This is an individual that wanted to have this potential mutiny on on President Putin. This was just 2 months ago, exactly to the date that this happened. And then a deal was struck, and we have seen Prigozhin over the course of those 2 months. He was in Belarus. Most recently, he was in St. Petersburg, at some point even upstaging Putin when he was meeting with African leaders. But I imagine the White House would want to make sure that they are talking to their allies and doing their own investigation. All we can say thus far as what the White House, what we know, is that they are briefing the President Biden on this development. We also should know that Bloomberg has not yet independently verified that Prigozhin was on this plane that did go down, which would presume that he was dead. Our thanks to Bloomberg Balance of Power co-host Anne-Marie Hordern. Now we're going to bring in Terry Haynes, founder of Pangea Policy, to talk more about this development. Terry, when you take a look at what we already know so far and what we still need to know in the hours and days ahead, how do you expect the relationships within Russia and the United States to be playing out?
Well, two prefatory points. One is, I think overall there's an increase in geopolitical risk for markets here, and that needs to be said, even though I think it's a little obvious. First, as Anne-Marie's already referenced, you don't know what you don't know. I've seen reports that although there are supposedly 10 people on this plane and Prigozhin was on the manifest, that there were only 8 bodies recovered. So you don't know whether the gentleman was on the plane or not. Secondly, this story is as old as Russia, the supposed elimination of a rival and or a dissident. But I think fundamentally, and I'll stop after this initially, it increases uncertainty about the Russian government and its intentions overall. It was widely thought Putin was weakened by the previous episode. I think both the previous episode with the Wagner Group and this episode show that the Russian government and Russian intentions are increasingly uncertain, and that's a very bad thing for markets, among others.
Besides the mutiny that had occurred just months ago, when we look at kind of the direction of travel for Vladimir Putin in Russia, as well as what this means for his war in Ukraine, what does it mean?
Well, I think what it means fundamentally is that Putin is pulling out whatever stops he can and is kind of going into, think about it as going into a hard shell, really. The idea that he's going to do everything possible to maintain and expand control of the government and the levers that are necessary for him to keep that. What we need to be looking out for is how this affects Wagner, first of all. I've always thought there's a very bad thing geopolitically that Wagner was in Belarus, where it can not only strike more easily at central Ukraine, but also can even be turned to threaten NATO allies in Poland and Lithuania. And so, what you've got is a rogue force potentially without its leader, potentially resisting the call to kind of rejoin the more Russian regulars and potentially play a larger role in Ukraine itself, which I think is a bad thing.
Yeah, Terry, I'm glad you bring up Lithuania because there's a summit, a NATO summit taking place next week in Lithuania, and something that's kind of sensitive, of course, to Russia and Putin. Talk a little bit about the timing here, because Anne-Marie mentioned that this private jet went down exactly 2 months to the day that the mutiny was attempted. What does it tell you about the timing of this event?
Well, it tells me something about it. It doesn't tell me everything. I mean, there's probably just a good opportunity presents itself as part of this, of course. But Putin considers, as I think we all know, Putin considers the encirclement of Russia coming from the expansion of NATO into the Baltics, as well as south from Ukraine. And this is not the first NATO meeting that's happened in Lithuania this year, and every one of those meetings probably looks like a stick in the eye from Putin's perspective, and with Sweden and Finland joining or poised to join NATO, you're seeing kind of the response, the Western response to, and the rollback of Putin's strategy. To one extent, everything Putin wanted to achieve from a Ukrainian invasion, exactly the opposite has happened. That's probably getting him a little bit more back to the wall, which makes him a little bit more unpredictable and dangerous.
Right. They always say that. So, Terry, what does this mean for investors? What does it mean for oil markets? What does it mean for grain markets?
Well, what'll happen in oil markets, of course, is it's likely to increase as the supply gets a little bit more uncertain. And I would look for, I don't know this, but I would look for one sort of response from Putin here post Prigozhin, assuming that's the case, in making grain shipments as difficult out of Ukraine as possible. So the price of grain is going to go up, and even the workarounds that have been tried to be put together through some Central European countries probably look a little less certain today. So there's going to be a greater uncertainty in those markets also.
All right, Terry, really appreciate your joining us. Terry Haynes is Pangea Policy Founder, joining us from Washington. Still ahead, we are, of course, keeping an eye on earnings coming up after the bell. One of the most highly anticipated reports comes out later today. NVIDIA, we're going to preview what to expect as optimism over AI leads the chipmaker to be a market juggernaut. Market cap, of course, over $1 trillion. This is Bloomberg.
Names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
So the EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
It's time now for Top Calls, a look at some of the big movers on the back of analyst recommendations. And let's get started with Dick's Sporting Goods. Bank of America downgrading the stock to neutral from buy after the company's disappointing second quarter numbers. The analyst sees increased risk to Dick's sales and margin outlook as consumer spending trends pull sales away from those COVID winners like outdoor apparel and bike stores. Shares are currently down more than 1%. Next up, we've got Brown-Forman, the alcohol beverage company behind brands like Jack Daniels, getting a double upgrade over at Morgan Stanley. The analyst lifting his rating to overweight as gross margins recover and concerns over broader industry growth dissipates. You can see the stock now up 3.5%. And finally, Super Microcomputer raised to neutral from underperform over at Wedbush. The price target is set to $250 a share. After releasing fourth quarter results earlier this month, the computer server company's outlook generated praise from analysts, with Wedbush saying it sees no near-term negative catalyst for the stock. You can see Super Microcomputer up almost 9% on the day. And those are some of our top calls. We're going to stick with computing because investors are on pins and needles for NVIDIA's earnings, which are due out after the closing bell. The stock is pretty much all the rage in the tech space for its prowess in artificial intelligence. The shares have jumped more than 220% this year, leading analysts to push their price targets ever higher. The average target has now risen roughly $15 over the past week alone. Joining us now is Matt Bryson. He is Wedbush Senior Vice President for Hardware Equity Research, and he rates NVIDIA outperform. He has a price target of $490 a share. Matt, good to speak with you. What is priced into the stock right now in terms of what NVIDIA is likely to report?
So it's a bit unclear to me. So I would say that people are looking for a higher data center number. So anywhere from 10 billion upwards with the guide. I'm at closer to 8 right now. The thing that's hard to say, though, is right now there's infinite demand for their data center GPUs. And so if they come up light, it's not a demand issue, it's a supply issue. It just pushes the revenue out. And so I think it's more about what they tell us in terms of how big they think the market will grow and what demand might look like, not just into the October quarter, but moving beyond that.
Hey, Matt, that's a $2 billion gap between your view and what the street is thinking for the data center numbers. So how much of an impact could it have on the stock if it doesn't meet that $10 billion that everyone else seems to want to see?
So I think maybe you get a bit of a sell-off if numbers going forward are a bit light of the whisper. But again, this isn't talking to how much demand there is out there. So if I don't ship that incremental $2 billion in October, then if I'm NVIDIA, I ship it in the January quarter or I ship it in the April quarter. It's all a question of how much the supply chain can feed them. And I think that if the stock comes off, there'll be people looking forward buying NVIDIA because it just pushes forward numbers up that much higher.
Right. I like what you said about how the demand is infinite. So if it's really the supply chain issues, we know that NVIDIA relies largely on TSMC. Is that a vulnerability? Because if TSMC has any kind of hiccup, that would result in a slowdown for NVIDIA.
So I mean, it's a vulnerability in the sense that in the near term, if TSMC isn't able to bring on more packaging capacity, because it's packaging capacity, it's not the actual fabs where they're short, then yeah, NVIDIA comes up short. Now, having said that, if we think about the next closest competitor being AMD, they rely on that same packaging capacity for their products. The other thing to think about here is we're talking about NVIDIA doing $10 billion in data center revenues, maybe 9 of that being, or close to 9 of that being GPUs. When you look at their competitors, you're looking at $1 billion plus next year being good numbers for Intel and AMD. So we're talking about a completely different scale here.
You think about the wave of AI-related investing that has come on the heels of the money pouring into NVIDIA. And if you look at NVIDIA's numbers today, you cover a host of related stocks. Is there anything that they could say that would change the story for its rivals?
I don't think so, unless they talk down the AI opportunity, which I mean they've never done that. They put out at some point a $1 trillion TAM for their end markets. So I would expect them to be saying mostly optimistic things about where they see AI going moving forward.
Yeah, and that is why so many people see NVIDIA as a barometer, a bellwether for the rest of the AI industry. Matt, really appreciate your joining us. Matt Bryson over at Wedbush, ahead of NVIDIA's results later this afternoon. Now, coming up, we're going to be joined by Willie Walker, Walker & Dunlop's chairman and CEO, to discuss New York City's plan to rezone Midtown to turn some empty office buildings into residential spaces. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
We wanted to recap a developing story for you. The White House says President Biden has been briefed about developments in Russia, where Yevgeny Prigozhin was listed among passengers on a private jet that crashed in Russia, with all 10 passengers aboard perishing, all 7 passengers and 3 pilots. This is according to Interfax, which cites the Russian Aviation Authority. But again, we don't have confirmation that he was on the jet, just that his name was on the passenger list. We'll continue to keep you updated as there are more developments. In the meantime, let's return to Wall Street Week Daily, because David Weston, our host, joins us now, and he has a guest with him to discuss a much discussed topic about providing more housing.
Yeah, we have a big issue, as you know so well, with respect to commercial real estate. Higher rates have brought problems to parts of the real estate market. To take us through the problems and prospects for the future and some of those conversions you talked about, welcome now Willie Walker. He's CEO of Walker & Dunlop, one of the leading commercial real estate finance companies in the country. Willie, thank you so much for joining us here. First of all, you've had a little bit of a rough spot in commercial real estate. Where are you now?
Oh, I think, David, we're still in a pretty rough spot as it relates to overall commercial real estate in the U.S. The 10-year running up to over 430 in the past 2 weeks has sort of, to some degree, added insult to injury as it relates to the cost of debt financing in the commercial real estate markets. And I think that many owner-operators are right now trying to figure out what their capital strategy is going forward, given what many people are looking at as rates being higher for longer.
There have been a lot of reports about offices, particularly in certain metropolitan areas, including New York City, I have to say, really struggling. And there are reports now that we may be changing the rules here in New York City to permit conversions from office to residential. Is that a possible way to help the situation, in your opinion?
I think it is, David, but it's a challenging one. It's going to take a lot of time. It's going to take a lot of capital. And converting office buildings to multifamily is mostly challenging, not because of the issues I just raised, but also because very few buildings are fully empty. And because there are still tenants in those buildings occupying 30 or 40% of them, the landlord needs to go buy out those leases. And the process of buying out those leases is very expensive and often very difficult to do, because the tenants in that building don't really want to leave. They've got a relatively affordable lease and they probably like where they are. And so it just adds an additional cost that many people don't factor into what the conversion is. But clearly in New York and Boston and some other metro areas, there are mayors and city councils that realize that their tax revenue is going to go down precipitously unless they do something to enable the conversion of these buildings into some functioning real estate. And as a result of that, finally, we do have some movement.
Part of the impetus behind this, as you know so well, Willie, is a shortage of affordable housing in a lot of urban areas. Take us through the housing situation right now. We have a lot of starts. We don't have a lot of turnover because people don't want to give up those low mortgages for, what, 7.3%, something like that. Where are we in residential housing in the United States right now?
So, David, it's such an important topic because I feel that a lot of senators in Washington and governors across the country think that there's the ability to sort of regulate a more fair housing market. And we all know that regulation isn't the answer here. The answer is supply. The answer is putting more single family and multifamily properties into the market. And as you rightfully point out, David, with the number of people who locked in low interest rate mortgages on their existing home in 2021 and 2022, those people aren't going to sell those homes. As a result, this new supply on the single family side is coming from new home builders. And the problem is that they're building to a price point that is still unaffordable to the average American, which then leaves multifamily. And one of the interesting things is that in 2023, we have more supply of new multifamily units in the United States than we've ever seen. And a lot of that has been spurred by the capital that went into the market in 2021 and 2022. And because of the amount of capital that came in from private equity firms that have been in sort of the crosshairs of many legislators saying, oh, it's terrible that Blackstone or Starwood are buying up single family homes and turning them into single family rental. Well, you go back to 2021 and 2022, that investment by those private equity firms created a huge spur in building permits and new supply of inventory. And that's exactly what we need. And so rather than limiting the amount of investment capital that comes from big private equity firms, they should be actually trying to do things things to bring more capital to the market because it's supply that's going to get us out of this pickle. It is not regulation.
Willie, you referred to refinancing. At some point, a lot of these projects are going to need refinance at how much higher rate than they were before. Where do we hit that? Because we're talking about higher rates for longer now. How long can people hold out?
Well, the real question there, David, is do you hold out because you think that rates are going to come back down, or do you capitulate? That it's as good as it's going to get, I got to go now. As I have said to our bankers and brokers across the country over the past couple of weeks, I think that a psychology degree is probably more useful today than a finance degree as it relates to doing new lending, just because it all seems to be so psychologically dependent. This move in rates, one moment someone says, I'm not doing it at these rates move up, and then they come back down and they say go. And so I think that one of the big issues here is if we are in this higher for longer period of interest rates, I think we are going to see a lot of people come off the sidelines and say, I need to do something now because I can't wait on, if you will, the forward curve, which is said rates are going to come back down to actually deliver those lower rates.
Willie, thank you so much for being with us. Really appreciate your time. It's Willie Walker. He's Walker & Dunlop Chairman and CEO. Tomorrow we're going to be joined by Neil Darr, PwC U.S. Vice Chair and U.S. Consulting Solutions co-leader. And then on Friday we'll talk with Afsane Beschloss, Rock Creek founder and CEO, about those meetings being held over in Johannesburg of the so-called countries. Well, that will be at 6 p.m. Eastern Time on Wall Street. Scarlett?
All right, thank you so much, David. David Weston, of course, of Wall Street Week. Now, still ahead, we've got about just over an hour to go before the close of trading. And Shanali, they were talking about higher for longer. Higher for longer was the big driver for the stock market and the bond market last week. Not so much this week.
Yeah, we are seeing some cooling today on the back of some economic data. 2-year yields down almost 10 basis points. 10-year yield down 12 basis points. What a relief to the market. The S&P near its session highs, I believe, up more than 1%. And we're watching that SOX semiconductor index just soaring before NVIDIA earnings.
Yeah, so there's still plenty of volatility. It just goes in the different direction now, at least for yields. And of course, we're taking you towards the close and giving you an update on NVIDIA as well before that company reports earnings at around...
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everyone. Live from our Bloomberg Interactive Broker studio, streaming on YouTube and Bloomberg Originals. It is NVIDIA earnings day.
Is it the most important earnings report of our lifetimes?
NVIDIA or Jackson Hole?
You know, when
you make the call.
politicians say this is the most important election ever.
Yeah, well,
they say that every election.
I would say this is a big one because there's been so much excitement, so much euphoria over artificial intelligence, and this is the company that's kind of been our North Star, if you will.
It's been our AI store.
It has. So it's NVIDIA earnings day. It's also known as Wednesday, August 23rd, and it's also AKA the day before when American workers are most often to tell their bosses, "I'm not going to be in today." We just heard that from Denise Pellegrini.
My stomach hurts.
Oh, I'm not feeling good.
Stomach bug, the most common excuse.
Stomach bug covers so much, because
I
how
know.
can you argue? Ate something wrong, got a virus. I'm not going to argue. Anyway, we got a lot coming up. We're going to talk about all of that. Carol Masser along with Tim Stenivek. We are going to talk NVIDIA. We're also going to talk about the market because both stocks and bonds climbing as investors once again bank on a Fed maybe taking a bit of a breather.
Maybe. We'll see what happens on Friday.
Yeah, we will see.
All right.
And then we'll see what happens in September when the FOMC next meets.
Hey, speaking of that, Carol.
Yes.
If you could write a Dear Jay letter,
Dear
as
Jay.
in Jay Powell, what might it say?
Dear Jay, good job so far. What's next?
He's very mild-mannered.
Who, Jay or Barry Ritholtz, who wrote the letter?
Jay. Barry Ritholtz, though, is going to be joining us in just a bit. He took on that exact task. We're going to catch up with him a little bit later in the program. How's your Peloton doing?
My Peloton's fine. It's a little rusty because I haven't been on it in a while.
Maybe that's part of the problem.
Yeah, that is. Peloton plummeting again on what one analyst says is a messy quarter. So we're going to talk about what is the future. We do have the first debate of the presidential season. It is tonight. We're going to talk to a political insider on what is best for business and what's best for all of us here in this great country of the United States of America.
Plus, currently about half of global supply of enriched uranium comes from Russia. It's today's big take. Why is this important and an uncomfortable reality for leaders here in the U.S. and in Europe?
Incredible story, the Bloomberg Big Take. And then we're going to get into dealing with all of our trash and how it's evolving into a more environmentally friendly way. We're going to talk to the president and CEO of the publicly traded Republic Services, By the way, number one investor in that company? Dun, da, da, da.
Who is it?
Bill Gates.
Oh, I've heard of him.
All right, we're tracking the markets right now, folks. Interesting day ahead of Jackson Hole. Let's get to it with our TV colleagues. Countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. I'm Scarlett Fu here with Shonali Bassick, and we're joined now by our colleagues Carol Masser and Tim Stenivek. And of course, we welcome in full our Bloomberg audiences across television, radio, YouTube, and streaming on Originals. And guys, I feel like this is the eve of so many different things. We're just kind of in wait and see mode for Jackson Hole, but first for NVIDIA.
No, it's really the eve of I'm not feeling so well and not coming in, but we'll talk about that in just a moment. A couple of stories in the housing market, and we do wonder how this might factor into some of the stuff we get out of Jackson Hole. But it certainly gives those who are going to be in attendance some more data points to think about. So we're talking about specifically U.S. home purchase applications hitting the lowest since 1995. Basically, those higher mortgage rates. We continue to talk about the move up in the 30-year, its highest, Tim, I think, since about 2000. And so that is certainly impacting people's ability to actually go out and buy a home.
Rates are the highest since 2000, but home purchase applications, Carol, last week fell 5%, the lowest level since 1995, Shonali. So because mortgage rates are so high, people are not moving, and that's creating people not wanting to take out mortgages.
Yeah, and the interesting thing from the Wall Street perspective here is not just the mortgage rate in and of itself, but that mortgage treasury spread that has been at historic wides here, which signal kind of more pain in the market ahead in terms of what the dynamics will look like moving forward.
Yeah, I'm looking at the home builder index, and all 17 members of the S&P 500 home builder index are up. They've, of course, done very, very well as we've seen depressed inventory across housing.
Well, but we should explain why, right? I mean, if people are moving, they're moving to new homes, or if people are buying homes, they're buying brand new homes.
They have no choice.
If you live in a home right now and you have a mortgage rate of like 3.2%, you're not going to move and someone else is going to move in, right? You're going to stay there, enjoy that low mortgage rate. And the only thing available is going to be a brand new inventory.
Yeah, so then you have to get a house constructed, and you got to get in line basically and wait, because that thing doesn't come around immediately. So yeah, new home sales doing just fine as mortgage rates stay elevated. Carol, you kind of hinted at it, but there's a very popular sick day apparently that a research firm has done a lot of work on, collected data on.
I want to be that research firm that does this kind of research. Just going to put that out there. But anyway, let's talk about it. It's crazy, right, Scarlett?
It totally is. And Shonali, I know you were looking at this. It is right around, why don't you tell us what day it is?
August 24th.
Tomorrow.
The funny thing about this is most American workers often tell their bosses they simply can't work that day, according to this report. The thing that I think is so funny about this whole story is that, one, people are off sick now. A lot of people are. Number two is I just took 2 days off next week just to play hooky from work. And so I definitely didn't get the memo off from this story.
I don't know if it counts if you admit it.
Well, I tell my boss it's my hooky day, but then I take it off as an actual day. So
She's
I don't know.
taking it as a paid time off day, so it's her vacation day.
Yeah, I'm a bit of a Madonna here when it comes to the work rules. But, the other thing about this, too, is the comparable story here is just how strict Wall Street is getting in terms of coming back to the office at this time. They can't, what do they tell you if you just say you're sick? What does Goldman Sachs say if you just, tell
everybody
people
gets
I'm not sick? Does
You
it
can
say come
get
in
sick.
anyways?
No, you can get sick. I think the issue is that they don't want people to say they're working from home on Friday or on Mondays, as most people have been doing, or not most people, but a lot of people have been doing since the pandemic ended.
So bosses out there, when somebody calls in tomorrow, because the excuse used most often is that I've got a stomach bug, and people talk about vomiting or diarrhea. I can't say that too loud on TV. But, and I think that's when the boss is like, oh, okay.
I don't need any more information.
No more questions.
We're not going to end it on that note, okay? I'm going to end it by saying I have no idea why August 24th is such a popular day to take off. I would imagine it would be around a holiday, like Labor Day or something.
It's probably the Friday before the week of Labor Day.
But it's Thursday tomorrow.
Well, Super Bowl,
sometimes it's
right?
Friday.
Super Bowl around
Super Bowl makes sense.
Or around Valentine's Day
that
is
makes
another
sense.
one.
What I want to know is, what does everyone do on the day off?
Go to the beach.
Go to the beach, yeah. All right, that does it, guys. Thank you so much, and of course, we'll check in back with you later on, right?
Yeah, we'll be back at 4 p.m. Wall Street time. We're going to count you down to the closing bell on this Wednesday, radio, TV, YouTube, and, of course, on Bloomberg Originals. Don't forget, we've got a bunch of earnings, including NVIDIA. They're all coming after the closing bell. We'll see you at 4 p.m. Wall Street time.
If people want to bust, break out before you get bum rushed at the Wild Wild West. When I roll into the Wild Wild West. When I stroll into the Wild Wild West. When I bounce into the Wild Wild West.
All right, Wild Wild West. Yes, we are all shifting our focus after NVIDIA earnings out west in terms of what's going on at Jackson Hole. And we do see an interesting market trade today because you do have stocks and bonds both climbing. We talked about some of the economic reports in both the U.S. and Europe, bolstering speculation that major central banks will pause their interest rate hikes to prevent a recession. And we do have tech really outperforming and leading ahead of NVIDIA earnings, but really leading the overall trade today, Tim.
Well, on the economic front, we actually just talked about this, Carol. We got a worrisome signal from the U.S. mortgage industry. Applications for home purchases tumbling to an almost 3-decade low. Separate data that we got today as well says that new home sales hit the highest in over a year. Traders weighing a U.S. government report saying that job growth in the year through March will probably be revised down by 306,000. I mean, if you're adding a couple 100,000 jobs a month, then, it's not a huge deal.
Still feels kind of strong. All right, so let's get to our economic and market roundup. Bloomberg News International. I don't know where that came from.
Just say yeehaw.
Wait, who is that dude with the hat and glasses? Bloomberg News International economics and policy correspondent for those of you on YouTube and, of course, our streaming service. Michael McKee.
That background looks fake.
I know. He has made our way out west to the Jackson Hole Economic Policy Symposium, where we find him on camera there.
Okay, so Mike McKee is the shot is just picturesque. He's a
little ominous though, man. He feels like
there's some clouds in the sky behind him, but giving off some Dutton family vibes, I think.
Exactly.
I don't know what's going on, but he looks good, and the shot is amazing,
All right.
and Jackson Hole's beautiful.
We're going to bring Mike in a sec. Also with us, of course, in our Bloomberg Interactive Broker studio is Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. No hat, no glasses.
Yeah, how boring. I feel really boring. Mike's really showing me up out there.
You're never
join the club, Gina.
You're never boring. But we are going to start with you, Mike, and head out west because you're on the ground there. We believe that's a real setting, not a chroma, green screen background. Are you talking to folks? Are people there yet? What's the mood? What's the setting here? What's our backdrop besides your backdrop? Wait, we're hoping to get some audio. Hang on a second, Mike.
Let's bring in Gina while we work on Mike's audio.
No.
Gina,
pressure's on, kiddo.
Yeah, pressure's on. You got to go find your cowboy hat at this point. But go ahead, Carol.
Well, I do feel like the market's a little bit of a sigh of relief today, and we're going to get to Mike on the economic backdrop. But what's your economic model for determining where stocks are, should be, and go from here? Because you guys track this.
As you know, we do run a number of models. One of them is our economic regime model, which is really just a real-time indication of where the economy is in its broader cycles and what that might mean for stocks. And we updated it as of the end of July. It was giving us a 90% probability, near 90% probability that the economy is not in recession. Now, this very same model throughout the latter half of last year was giving us really high probability that the economy was in recession. So it was suggesting, things are weakening materially in the economy, and therefore you want to be pretty risk averse. But as of January, it was saying, hey, risk on, things are starting to look better. The worst of the economic momentum is probably past. Now it's getting really close to peak performance. So at least for now, the indicators are generally pretty solid economic conditions, despite the fact that manufacturing continues to lag. We've got enough indication from a recovery in consumer sentiment and consumer confidence and a recovery in continuing claims for unemployment insurance to offset those manufacturing sort of weak numbers.
What about, Gina, real quick, all the comments that we heard this week and last week from executives at retailers being concerned about the customer?
Yeah, I mean, maybe they're concerned about the customer deteriorating going forward. That's not what the model's meant to do. It's not at all predictive. It's just a suggestion of what's happening real time. I mean, I think what you see in the broader consumer spending numbers, and this is really also indicated by the Atlanta Fed's GDP, or the real forecast for GDP.
We hit 6% on that yet?
Blockbuster spending growth.
Yeah.
So maybe at retail, which is a little bit more goods oriented, it's very consistent with what you're seeing in some of the manufacturing surveys, some weakness reflecting interest rates going higher, maybe a mix shift going on in spending, but so far services spending is holding up the bulk of the consumer spending pie, and that certainly is getting reflected in pretty strong actual growth numbers broadly.
All right, let's get to Mike. Mike, cattle got your tongue maybe before? Sorry, that was really bad. So come on in. I know.
Gets the tongue, yeah.
So talk to us about, I don't know who's on the ground there yet with you all, but give us an idea of if you are hearing anything early on and what you see as the economic backdrop for all the speakers, including Jay Powell at Jackson Hole this year.
Well, there are a few central bankers here, and I did have a discussion of the Phillips curve at 6 a.m. with an international central banker. But in general, people are just happy to be here and see this lovely scenery behind us, which is, Carol, real. But the economic backdrop is kind of mixed. It's very different from last year when inflation was about 9% and unemployment 3.5%, and everybody was predicting it would go up. Unemployment hasn't changed. Inflation's come way down. So kind of the question everybody on Wall Street wants to know is what's going to happen next? And they're looking at Jay Powell to give him some answers. And I suppose the folks in Europe and Japan are looking to their central bankers who are also going to be here for the same kind of answers. And I think that what we're going to hear is that they don't really know. They're going to keep their eyes open. They're not going to move too quickly in either direction. Probably a pause in September for the Fed, but the numbers are mixed and inflation is still going down. So don't mess with a good thing at this point.
What could change that, Mike? Probably a pause. What kind of data would the Fed have to see in the next month to say, actually, we got to hike again?
Well, there are two inflation reports before we get to the next Fed meeting, but economists are pretty good at forecasting those, and they don't see them as a problem. So the general bet is no move in September, but then the question becomes what happens with 2 or 3 more inflation reports going into November. We get into the fall, we start to get into the heating season. Do we see inflation start to rise again? So it's going to be an open question for a while, and I think one of Jay Powell's jobs out here is to try to convince people that the Fed isn't going to start cutting immediately, and they're not going to react immediately to any one number, but they're going to look at the trend over this period of time and see what happens before they make their decisions. Now, the overall theme of the conference is structural changes in the economy, and that's going to be kind of interesting because do we go back after the pandemic disruptions to the low interest rate, low inflation days, or are we going to see inflation rates and growth rates and interest rates higher for longer on a secular basis? And that's kind of going to be the interesting question for people to parse this weekend and certainly on trading desks on Monday.
Yeah, structural changes says to me, okay, we're thinking about things differently. It's not like, hey, we're at Jackson Hole and the theme is back to normal, everybody. It just says a lot to me. Gina, come in on the trade today specifically. Most names in the S&P 500 or higher. I'm looking at some fairly broad-based buying, but again, it's those real big growth names that are really outperformer, whether it's a Meta, whether it's NVIDIA, they are really leading the way.
Yeah, and it is a consistent sort of momentum trade that's been taking shape all year as the winners are still the winners and the future winners.
Just come back, right?
And the rest of the market tries to rotate in and participate every now and again, but it has been a very concentrated market so far this year. I think some of that is really reflecting this anticipation that the equity market has that at the very least the worst of the rate increases are in the past. And so even if the Fed doesn't ease policy going forward, it's pretty clear that the rate increases are slowing down and we are moving into a slightly more stable environment for interest rate increases, and that relieves the pressure on valuation multiples that had existed for some of the growth styles last year. But it is a lot about NVIDIA. I mean, it's just hard to get away from this idea that this environment is changing pretty dramatically as companies at large invest in AI. It benefits the tech space most profoundly. You see not only revenue growth gains, but operating efficiency gains starting to get embedded into forecasts, and that's allowing for some bubble up of the space at large. And that I would say is still the primary driver of activity in the tech space is this idea that we all came into the year very bearish on the outlook, and suddenly that's shifted materially with capital spending plans just shooting higher very, very rapidly.
Hey, Mike, 20 seconds. Are people talking about NVIDIA and Jackson Hole?
No, they're talking more about bears and elk and moose than
lions and tigers and bears. It's interesting. I did exactly. I did a poll on Twitter X. I don't even know what to call it anymore. And I'm like, most important, today's NVIDIA results, tomorrow's Jackson Hole. 60% said Jackson Hole, 40% said NVIDIA. So
yeah, we'll see what happens at the end of the day today.
All right, Mike, there's a bear behind you. Just be careful.
Rude.
And no bear on Wall Street. It's all bulls, it feels like right now. All right, Gina Martin Adams and our own Michael McKee. Guys, thank you so much. Great setup for us on this Wednesday.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. A headline from the Bloomberg Professional Service, S-Mark, says it will not be making a takeover attempt for U.S. Steel Corp, citing the United Steelworkers' support for a rival bid from Cleveland-Cliffs. Stocks continue to hold on to gains. We're 38 minutes away from the latest numbers out of chipmaker and AI poster child NVIDIA. NVIDIA shares are advancing now, holding on to a gain of 2.9%. We'll be all over NVIDIA when that number drops after the close of trading. S&P up 47 now. That is a gain of 1.1%. We've got the Dow up 151 points, up by about 0.4%. NASDAQ, the composite index, now up 228 points, up by about 1.7%. 10-year yield, 4.19% with a 2-year, back below 5% at 4.95%. Spot gold, $19.17 the ounce, higher by 1%. And West Texas Intermediate crude down 1.2%, $78.79 a barrel. So as we await the latest numbers out of NVIDIA, what about the broader backdrop for tech stocks? Nadia Lovell is senior strategist at UBS Financial Services.
We've seen tech take a little bit of a breather since July, down about 7% since mid-July. You know, the earnings reports were quite mixed. Of course, we continue to see weakness in PCs and smartphones, and that did have impact on some of the semiconductors and hardware companies. The IT budget environment is still quite tepid.
And you can hear more of that conversation with Nadia Lovell on the Surveillance podcast. You can download it wherever you get your podcasts. So again, ahead of earnings from NVIDIA, the stock trading very close to session highs. Right now, NVIDIA is advancing by 2.8%. Recapping, S&P up 48, up 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stanovic. And man, take a look at what was once a pandemic darling. We're talking about Peloton. Right now down almost 24% at its lows today, almost down 28%, the most in about 2 years. And it's on track, Tim, for a record low close. Sanford C. Bernstein saying this was after a messy fourth quarter, where they gave a weak revenue forecast for the current quarter and also said costs for a product recall were significantly more expensive than it anticipated. It just can't seem to do anything right.
Like, if you haven't been living under a rock, you'll know that Peloton has been mired in a 2-year tailspin. It was an early pandemic darling. The company's bikes and more were a hot commodity during COVID-19 lockdowns. Carol?
I have one.
You got one.
Bought it before the pandemic. I've had
it
for
for
a
You
while.
were early on the Peloton train.
Yeah.
Demand, though, slumped after people began heading back to offices, going back to gyms. And also, you got to remember, when it comes to working out, there are cycles. There are fads. Like,
totally.
Remember Jazzercise, the Thighmaster, Nordic Track? Like, these are all things from my childhood that, like...
Oh, come on. You have a Thighmaster at home.
Yeah, definitely.
All
We
right.
did at one point. We absolutely did in my house at one point.
Oh, my God. Well, the stock, we're talking about Peloton, now down around 97% from its all-time high back in January of 2021. That was the peak. So where does Peloton go from here? We have great voice on this. David Traynor is the CEO at New Constructs, an independent investment research firm. He's been advising investors to sell. He joins us on Zoom from Nashville. David, so nice to have you back with us. Where does Peloton go from here?
I think it goes to zero. You know, Peloton was one of our original zombie stocks. And the key defining feature of a zombie stock is burning cash, but not having a lot of cash to support that burn. So at some point, it just runs out of money. And when we first put Peloton on the zombie stock list, the CEO announced that they were going to have to engage in major cost cuttings in order to extend their cash burn runway beyond just 6 months. And what happens, you know, in that situation is you just end up in a death spiral. To all the points you guys were just making, it was never really a good business. And so, you know, now you got a good business slashing costs, and it's never going to be able to get out of its own way and become a successful business. It was a bad concept from the beginning, in my opinion.
Why do you believe that? I mean, think about it.
Because I don't think there's.
But hold on, before I let you answer, I'm just going to remind people that this is a company that wanted to be sort of the Netflix or like Amazon Kindle of working out. You buy one expensive piece of hardware, and then you pay a monthly fee, which is high margin, to the company, and you just keep paying it every month, and you don't need to buy new hardware.
The problem is that anybody can do that, right? I'm not saying people don't want to do, or have what they're selling, but to make a profit at it, you're going to have to do that in a way that no other business can. And that's what I think a lot of investors often miss. There's a difference between a good product and a good stock. There's a difference between a good company and a good stock. And look, for Peloton to ever be successful, they would have needed to have provided an exercise bike and set of entertainment that goes with it that was meaningfully differentiated and better than what anyone else could do. They couldn't do it. I think being born into this sort of super hype IPO environment meant that they had a lot of money and really weak corporate governance, which meant that spending was terrible and crazy. But yeah, look, the bottom line is, I'm not going to tell you, people don't want to ride their bikes and be able to watch videos, right? But they can do that in a lot of other ways. And the number of copycat products that have been out there ever since, soon after Peloton launched, immediately proved our point, which we wrote, by the way, before the IPO. We warned people to stay away from this IPO from the beginning because, again, there's no moat around this business. There's no competitive differentiation to create profit margins.
Who's your favorite instructor, Carol?
I can't even remember. It used to be Robin. Robin was really cool.
But this was
another woman.
This was what I thought was the moat. I thought this was the moat. Were these instructors that they were paying $500,000 a year, Carol?
Yeah.
And you couldn't find anywhere else. They had exclusive contracts with the company, and that's what drew people, right?
Yeah, and I will say it did create a community. I like you could be a live aspect, or you could pop into the library. I liked it. My daughter, who's much younger than me, obviously, she liked it. But I do wonder, David. I mean, it's interesting as you say. You got to be either a good company, a good business, or a good stock. I hope I didn't miss anything. Are you saying that Peloton is none of those?
Not necessarily. I mean, look, people like the product, but I don't know that it's been a good company and that it's just been losing lots of cash, been a big cash burner forever. And I'm not saying that you might not like an instructor here or there, but look, the bottom line is that it has been a great product for consumers because they've been able to buy it at below cost. Right? Peloton's never made any money. Everything they're selling is selling at a loss, which means they're selling it to you effectively below a proper cost. So that's the distinction. And when I say like a good company and a good stock, one of the classic examples has been Walmart for years, right? Makes a lot of money, super cash flow generator, but the valuation is too expensive. Right? The valuation implies, and this is today and more in the past. NVIDIA, another great example, good company, bad stock, right? Doing a lot of great things, but when the valuation implies you're going to be over 2.2 trillion in revenue and have 1,000% return on invested capital while growing revenue at 25% compounded annually for 20 years, the valuation is too much. So the key to investing is to buy good businesses at good prices. And so you can be a good business and a good company, but not be selling at a good price.
So where do we go from here with Peloton?
I recommend if you haven't already sold it, I would take it out of the portfolio because I think it can go to zero. And part of the trap here is that it's only been able to survive this long on the good graces of unsuspecting investors believing that there was more there than there is.
Because it's interesting what you said about a loss on the bikes, and I get it, but I'm still paying a monthly fee, even if I don't use it. Like, that is commitments you make, set it and forget it, you can. But that's not enough, correct?
It hasn't been. I mean, they're still burning cash. And there's just not a lot of people that are going to do that either. I mean, let's face it. Or they can do it, at their gym, or they can do it with a group of people. But I think, what you guys led with on the beginning about how this being a COVID darling because everyone was trapped in their house and now they had a way to connect with other people. That was good for a while, and I think there was a small, maybe a quarter or two where Peloton maybe had a positive profit margin, but never since.
Does it make sense for a big company to come in and buy Peloton? In the past, in the last couple of years, we've talked about, would this be a good fit for Apple? Would this be a good fit for Amazon?
Yeah, I mean, look, that's what we call stupid money risk for these business, like these danger zone stocks or zombie stocks that, you never know. Like, for example, Mattress Firm was one of the most heavily shorted stocks in the market. It was a terrible business. It was about to go bankrupt. And then some South American company came and paid a 30, 40% premium to the stock price. Crazy stuff happens in the stock market. So I'm never here to give any kind of advice in general, but especially not to ever say, hey, shorting is a good idea because it's dangerous.
NVIDIA. Oh, wait, go ahead. Go ahead. Final thought.
I don't see any white knight coming out and saving Peloton. Again, there's too many, like Amazon's got its own knockoffs.
Yeah.
Right? You've got Nautilus and a lot of other exercise companies. They have knockoffs on a Peloton. There's nothing innately special, so special about a Peloton that I think somebody wants to buy it.
30 seconds. Can you give me 30 seconds on NVIDIA as we wait for those earnings?
Yeah, good company, bad stock, but extremely expensive valuation. I mean, they've got to improve margins by like 1,000 basis points and grow revenue at 20% compounded annually for 25 years to justify the current stock price of like around $455, $460.
Yeah, $469 right now.
I want you to repeat that, David. You said good company, bad stock?
Yeah.
Good company, bad stock, right? They make a lot of money, but the stock price is implying they're going to make a huge amount more. And keep in mind, in order for you to expect to outperform as an investor, you've got to believe the company's going to do even better than the 20% compounded annual profit growth for 25 years.
Got it.
You know what I mean? Like,
yeah. Hey, listen, forgive. Thank you, though, so much. You did what we wanted to do, especially on Peloton, and appreciate the NVIDIA thoughts. David Traynor, CEO at New Constructs, on Zoom from Nashville, Tennessee.
Well, let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. A private jet has crashed in Russia, and emergency officials say all those on board were killed. The question is whether the passenger list was accurate, since it included Wagner chief Yevgeny Prigozhin. There are questions about whether he was on board, and if he was the crash an accident? He's the man who mounted a short-lived mutiny against Russia's military leadership back in June. President Biden has been briefed on the incident. Well, you can call it a high-risk job interview. 8 Republican presidential candidates will be taking the stage in Milwaukee tonight. Missing, though, will be the GOP frontrunner, Donald Trump, who's opted to sit this one out. Greg Valliere with AGF Investments says there's still plenty to learn by watching.
The thing to watch tonight is, does a new player emerge? Maybe Senator Tim Scott of South Carolina. He's someone to watch. The other thing that I think will make headlines tomorrow are issues. What about funding for Ukraine? What about the enormous U.S. budget deficit? So I think there will be some issues that will be significant for people in the markets to watch.
Greg Valliere of AGF Investments says it'll be interesting to see who is the breakout star tonight. The 2-hour debate is being held in Milwaukee, which is the site of the party's nominating convention next year. You can find it on Fox News at 9 p.m. Wall Street time. One by one, the 19 defendants in the Georgia election fraud case are turning themselves in to Fulton County authorities in Georgia. This afternoon, former New York City Mayor Rudy Giuliani surrendered in Atlanta. Earlier in the day, he was not sounding pleased with having a mugshot taken.
A mugshot for the man who probably put the worst criminals of the 20th century in jail.
Giuliani says the case against him will be proven to be a complete hoax. Former President Trump says he'll surrender tomorrow. Global news 24 hours a day. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg, and we are 20 minutes away from the latest numbers out of NVIDIA, 20 minutes away from the closing bell. Stocks are higher. Right now, let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Good afternoon, Charlie. Stocks are climbing as big tech leads the way while yields are sliding. The Dow is up 170 points, S&P higher by 50, with the Nasdaq jumping 235 points. The U.S. 10-year yield is at 4.19%, and small caps are higher by 15. 10 of the 11 main S&P sectors are trading higher, led by more than 2% gains in communication services and tech, while energy is the only group in the red. Nasdaq biotechs are down 25 points, transports rise 150, semis are up 80, while the VIX is lower by 6%. Leaders in the Dow, Intel, Merck, and Apple, while Nike, J&J, and Boeing are the worst performers. In deal news, Esmark won't make a takeover offer for U.S. Steel after the United Steelworkers supported Cleveland-Cliffs' rival bid, and Synopsys is said to be near a deal to buy Germany's Pipe Tech. In other news, WeWork is tapping restructuring advisors amid doubts about its future, as drug maker Mallinckrodt saying after it said it plans to file for Chapter 11 bankruptcy. Wrapping things up, Charlie, as you said, it's a big earnings night with all eyes on NVIDIA. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey Lipschultz, and to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 17 and a half minutes left in today's trading session. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Broker studio on YouTube, on Bloomberg Originals.
We're everywhere.
Yeah, we are, and it seems like bulls are everywhere today, at least if you look at the trade. Most of your major industry groups, I think 10 out of 11 in the S&P 500 are higher for the day, and tech once again outperforming, as we heard from Charlie, up 1.8%.
Yeah,
the NASDAQ 100, right?
Yeah, the S&P 500 up 1.2%. The Dow Jones Industrial Average
Everything
up 0.6 of
awesome.
1%. It is for now. What a difference then, look what happened last week, Carol.
Yeah, I know. And August has had a very different tone. So let's see what Jimmy Lee has to say. He's founder and CEO at the Las Vegas-based registered investment advisor, Wealth Consulting Group. Today, though, we find him on Zoom from Sea Island, Georgia. Everything awesome there in Georgia, Jimmy Lee?
Sun just came out. Maybe it's because of you guys. I don't know. It's very nice here. Very nice.
What do you care more about this week, NVIDIA or Jackson Hole?
Both are important, but I think NVIDIA is probably more important when it comes to related companies that might participate. But I think Jackson Hole, I think Powell's going to be normally hawkish like he always is. And I think he needs more evidence of lower inflation before he can sound a little bit more dovish. And so I think they're both important, but obviously just in a few minutes here, we'll have what NVIDIA has to say. And I think they'll probably end up, posting some good numbers, but maybe having some issues with supply and things like that and meeting demand. Who knows? We'll see.
All right, we'll see. We just got under an hour to go, and then we'll find out. It is the most important earnings report of our lifetimes, Carol. So
that's what everybody says.
That's what everybody's saying.
Well, I am curious though on NVIDIA. I mean, are you thinking? I don't know. Have you been recommending to investors to buy it ahead of earnings? We've done some stories, I think, about the options trade, and it looks like we're anticipating maybe a 10% pop potentially on the earnings report, at least based on some of what we're seeing ahead of it. I don't know. We just talked with David Traynor, thank you. And he's saying, good company, bad stock.
That's what
because
he
it's
said about
just
NVIDIA.
so
because of the valuation,
overvalued. Yeah.
You know, I was actually having a conversation with two people on our investment committee this morning about the stock, and our CIO was talking about how the options market is pricing the potential volatility with NVIDIA in this earnings report. So definitely, I've not been recommending people buy prior to earnings myself, but if you're going to be doing it, you should know that it could be very volatile one way or the other, right? So I think it's really for traders to try to invest ahead of earnings and things like that. And you know, we'll see. I think the company overall, though, and will benefit from this massive trend in AI. We'll see in the long run if companies that are chasing AI will get the return on the capital that they're investing. So that's yet to be seen too.
I want to go back to something that you said, Jimmy, about Powell needing more evidence of more inflation, or more evidence of lower inflation, I should say. Are we starting to see that evidence? And look, I understand that services is more important than goods and to our economy, but we are getting some startling stuff from some retailers. Foot Locker today, for example, the warnings that we heard from Target's executives, Walmart executives, Dick's executives. Does that tell you that inflation is easing?
Well, I certainly believe that those are very important factors for the strength of the consumer and where we're at right now with that issue. But I think Powell, unless he gets, more of the headline numbers that they focus on consistently lower, I think he's going to continue to feel the political pressure from his other committee members and just in general for talking hawkish until we start to see the lower numbers. Now, my personal opinion has been, as you know, as I've been on your show, throughout the year, that I think inflation will finally start to look even better than what may be predicted because of this housing shelter cost number that is a big part of the core CPI that will start to look better in the next few months and throughout the rest of the year. As you know, that number, the owner's equivalent rent portion of the shelter cost is the biggest portion, and those numbers should definitely start looking better and have a lower impact and a positive impact on lower inflation going forward. So maybe Powell will get what he really needs, which is better inflation numbers so that he can pause. And I think the futures market's still predicting that 70-80% or so that the Fed's going to pause in September. But I think after that, I think it's almost a coin flip as far as investors are thinking.
It's interesting. Talking in the newsroom and someone saying to me, kind of tired of all the Fed speak. And I wonder for you, who has to make investment decisions, what is really the constructive conversations or narratives that really make you pull a trigger on either buying or selling something? Is it the Fed conversation, or is it something like an NVIDIA report?
I would say it's really neither, Carol. As you know, we work with long-term investors, and most people that are listening aren't traders, and certainly not institutional traders. And so people that are invested for the long run, we've never promoted market timing and getting in and out of stocks. We believe that, under overweighting sectors or different asset classes, depending on the part of the business cycle that we're in, an economic cycle might make sense. But getting in and out of stocks, trying to market time has never really worked consistently. Historically, stocks are up 75% of the time, and so it's very difficult for short sellers to earn money doing it that way. And so it's a very difficult game to play. So really it's more about asset allocation and maybe to invest new capital. Like these things I think matter, trying to get money to work. A lot of investors, even professionals, have missed out on the huge gains this year. I don't know if they're going to get their chance to get back in. So I don't really see how we're going to retest the lows from last year.
Very quickly, 15 seconds. I mean, are you still holding are your clients holding lots of cash on the sidelines, high cash positions, or no, much more fully invested? Very quickly, please.
I would say that the firm's more fully invested, but people do have a lot of cash, and it's evidenced by the $5+ trillion that people have in money markets.
All right, so a sign of some cautiousness. Jimmy Lee, thank you so much. Be well, founder and CEO at Wealth Consulting Group, on Zoom from Sea Island, Georgia. We're just about 10 minutes away from the close. Carol Master, Tim Stanovic, we are Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of NVIDIA. It is the big event after the close of trading. Earnings from AI poster child NVIDIA. Mandeep Singh is a senior analyst at Bloomberg Intelligence. But on Bloomberg Markets this morning, he explained why this chipmaker is so closely watched.
Look at what they have done so far this year. They are the biggest growth story in tech. A company growing top line at over 50% when, the entire tech land is growing low to mid-single digits. So clearly, yes, valuations have run up, but they are compounding that top line at 50%.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Mandeep referred to what the stock has done this year. It is up 221% on the year. And today, NVIDIA shares are up by another 2.9%. We'll be all over those numbers as they break shortly after the close of trading. Foot Locker shares are plummeting after cutting its full-year forecast and reporting results that fell short of Wall Street's expectations amid concern over weakening spending patterns. Shares of Foot Locker down now by 29.1%. Among the other retailers out with earnings this morning, Kohl's Corp's second quarter profit exceeded the average analyst estimate, and shares of the department store chain, they're up now by 4.7%. Those are the company stories we're following at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes away from the closing bell on this Wednesday. And then we've got NVIDIA earnings, although they're not going to come for about another 25 minutes.
4:20, 4:25. You got to wait. You got to hold your horses.
Where's Matt Miller? 4:20. 4:20.
He's probably listening to us right now. You got to hold your horses, Carol.
Anytime you say 4:20, right, Matt? Like, perks up. It's like really fun.
I wouldn't know.
Sorry.
I wouldn't know.
I'm very happy you're back.
He was filling in for me. He actually, a little behind the scenes, he just came in.
Buds.
We
You're
are.
really
I love
cute.
Matt. He just came into our studio.
He did.
And showed us a really sweet video.
He did
of his
indeed.
daughter.
Yeah, he really did.
Yeah.
He's really a mush, as he should be. And it's really lovely to see. All right. We're going to table Matt for a moment.
Okay.
Because we do have a few minutes. We're going to head over to our TV colleagues and talk about the close and break down a bunch of earnings. I did want to mention a story. And actually, speaking of Matt, he talked with our Matt Winkler about Laszlo Barini earlier on television, who has passed away at the age of 79. Investment advisor, created an analysis basically using money flows to figure out where stock moves would happen. And I will say, Dylan Radigan used to do it when I first came to Bloomberg some 24 years ago. We used to do a big segment on TV, and it was called Money Flow. And it would be tracking the big block trades as an indicator of institutional investor interest. And it was a very popular segment. Dylan did it. He made it iconic. I used to do it and fill in for Dylan and do it. But viewers loved it. They would be like, can you do the money flow on this stock and this stock? Because the idea was where the big money was going, eventually you'd see certainly gains in a share price, and it was where investor money overall would go. But,
so Laszlo used to come and do this.
well, he really pioneered the money flow analysis. And it was something we really incorporated here at Bloomberg and certainly on the Bloomberg terminal. But really iconic when he would come on air. It was a big interview because everybody wanted to see what he had to say about the market. And we are thinking of his family, his friends, and sad to see him pass away. And again, he did die at the age of 79.
Yeah, his wife in a statement called him a, quote, brilliant, quiet, private person who was a true American immigrant story.
Yeah, top market forecaster in the 1990s by using that money flow analysis. We have a great write-through on the Bloomberg terminal, so highly recommend you head to Bloomberg.com or just check it out on the Bloomberg. Right now, we're heading over to our TV colleagues, talk about the trade and break down some earnings for you. We've got Beyond the Bell starting now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, we've got Scarlett Fu and Shonali Basak right here counting you down to the closing bell, and of course joining us to take you beyond the bell with a global simulcast. Carol Masser and Tim Stenovic, bringing together our audiences across Bloomberg Television, radio, YouTube to parse through the most crucial moments of the trading day. It has been up, up, and up all this trading day, whether you're talking about bond prices or stock prices.
Yeah, everything is awesome, I guess. I don't know. It's really remarkable, but I'm just like amazed if I look at the 11 industry groups in the S&P 500. I know we'll talk about them in just a moment, but 10 of the 11 are up. I mean, it really feels like the bullish sentiment really overtaking, and some of it has to say, has to do with, Tim, right? That this idea that maybe central bankers, maybe Jay Powell and company are getting to the end of raising rates.
Maybe. That's the question. I think what we find out the answer to before that, though, and you say, Scarlett, the most crucial moments of the trading day, I don't think we've hit the most crucial moment of the day yet, which is NVIDIA earnings happening in just about 20 minutes. We've been spending a lot of the afternoon asking our guests what's most important this week, NVIDIA's report today or what Powell says in Jackson Hole. And more people today saying NVIDIA.
Yeah, and they're not the only one. You think about what you get in terms of NVIDIA's additions to the S&P 500, the stocks, and other indices this year, and it has just been a meteoric rise, and it's brought a lot of boats up with it. And the question is not just NVIDIA alone today. How do those other stocks rise or fall in tandem?
I was looking at some of the valuation measures for NVIDIA, and it's pretty remarkable if you look at the PE, the estimated PE, all of that for this company. I mean, it's just completely out of whack. 226 PE, just for starters. All right, there's a closing bell.
Kiddo?
They are profitable. This is true. You're just paying a lot for it.
Yeah.
We're looking at gains here for equities all around. The S&P 500 closing up more than 1%. That's a 48-point increase. The NASDAQ, the leader here, gaining 1.6% on the day to 13,721. The Dow, a bit of a laggard, gaining only half of 1% to 34,474, Carol.
Yeah, I just want to mention David Traynor of New Construct. We had him on to talk about Peloton, but we also talked a little bit about NVIDIA, and he said, good company, not a great stock, Shonali, because of the overvaluation right now.
Yeah, when I take a look at the sectors within the S&P 500, broadly higher on the day. Look at all that green, guys. But you are lifted up significantly by semis ahead of that NVIDIA report today. Media and entertainment, technology, auto. You saw green across the board, even in the banks. You did have a little bit of red on the screen. Those are consumer durables and apparels there with 0.8% decline on the day, and energy down about 0.4%. Remember, we did see some pressure on oil prices today.
All right, so let's get to some of the individual gainers, if we may, in today's trade. Just pulling them up on my Bloomberg. Abercrombie & Fitch, certainly an outperformer, up more than 23% in today's session. Cool again, apparently, everything that the company has to offer. Soaring, it reported better than expected quarterly results, boosted its year forecast. City analyst over there saying that this was a blowout quarter, so no doubt about it is, again, that stock up 23%. Netflix, this was up about 3.5%, rallying on optimism that the company's password crackdown is fueling some growth. Oppenheimer also affirming its outperform rating and $515 price target. The company closing at $427 and change. Oppenheimer citing tailwinds from its paid sharing and advertising initiatives. And then I got to mention NVIDIA, up another 3% today. Trade ahead of earnings today. It's up, 220% year to date. The stock had pulled back from late July to kind of mid-August, about 12%, and then it's rallied about 15% since then. But nonetheless, we're all kind of on pins and needles waiting to see if that valuation, that outsized valuation, makes sense based on the actual fundamentals.
All right, we're on pins and needles waiting for NVIDIA, but there are some other companies reporting right now. Let's go to what Autodesk is doing in the after hours after the company reported that it is boosting its fiscal year adjusted earnings per share forecast. Also, it beat estimates. Second quarter adjusted EPS coming in above estimates at $1.91. Estimates were for $1.73. We also saw the company come out and say that its third quarter adjusted EPS is $1.97 to $2.03. So its outlook there, beating estimates that analysts had of $1.92. In the after hours, it's surging up 6%, Scar.
All right, let's take a look at what's going on with yields as well, because as much as we've had a rally in stocks, we've also had a rally in treasuries as well. You can see the yields falling, whether it's the 2-year or the 30-year. There was an auction of 20-year bills, or I should say notes, excuse me. Bills notes. There was a 20-year auction, which tailed by nearly a basis point. It stopped at just under 4.5%. So it was fairly tepid demand, but again, yields coming down here, and by a fairly large margin as well. Look at that 10-year yield down by almost 14 basis points.
All right, I'm going to go back to some decliners because I was doing the Autodesk when decliners came across, Scarlett. Foot Locker finished the day down by more than 28% today. At one point, it cratered at more than 36%. This after the company slashed its annual outlook for a second time and paused its dividend payment. The results certainly falling short of Wall Street expectations amid concern over weakening spending patterns from consumers. Citi actually says the sustainability of the brand is in question. We also saw shares of Nike fall as a result of Foot Locker's report. Under Armour was down as well. Nike down for a 10th day in a row. This is the longest losing streak for the company, going all the way back to its 1980 IPO. So longest losing streak for Nike in 40 years, down another 2.7% today. It was already struggling before we heard from Foot Locker. This was over concerns of China's sluggish consumer and then elevated merchandise stockpiles continuing to weigh on profitability across the entire apparel industry. Peloton finishing down by 22.6%, hitting a record low. Shares are down 97% from all-time highs. That was back in January of 2021. The company gave a forecast for the current quarter that said costs for a product recall were significantly more expensive, and a weak revenue forecast for the upcoming quarter and remainder. I should note David Traynor over New Constructs, he's been advising people to sell. He thinks that Peloton can go to zero.
Really?
Yeah.
But there's hardware there. There's some value.
There is, but I mean, he said there's just spending way too much money. Continue to spending way too much money.
I'm guessing people canceled their subscriptions or paused their subscriptions when they went traveling this summer and just haven't renewed it.
Not just that. People paused their subscriptions as a result of the recall.
Yeah.
Yeah, it just seems like they can't kind of get it right. His point is, too, that there's other options out there and so on and so forth, but we'll have to see. Hey, I do want to mention, we do have another earnings report crossing the Bloomberg terminal, and this is Splunk specifically, and this, again, is an infrastructure company, and we're taking a look, second quarter adjusted EPS, 71 cents a share versus 9 cents. That's year over year. We're also looking at product revenue of $640.2 million. That is beating the Wall Street expectation, 624.9. And if we look at revenue, again, overall, as we said, it's beat. And we're looking at that stock up 6% in the after hours. This is an infrastructure hardware company. They've got AI-driven software. So we're going to see how much that is driving some of the momentum. Keep in mind, though, this is a stock that's up on the year, but down about 50% from its September 2020 high. So it's still looking for some recovery. Also, some outlook here. Third quarter revenue, 1.02 to 1.04 billion, guys. That is very upbeat as well. The street estimate out there is 981.6 million. So again, that stock up 6% in the aftermarket.
Okay, we're also keeping an eye on Snowflake because the software company that really does a lot of cloud work has come out with its second quarter numbers. And here we have a beat for the revenue line, $674 million versus the estimate of 662. Product revenue also beating the consensus estimate. But the third quarter forecast, when you look at the midpoint of the range, it is below the average analyst estimate. Also, the company did not raise its full year forecast. It still sees its full year product revenue forecast at $2.6 billion, pretty much in line, if not a little bit lower than the consensus estimate. So the stock, as you can see, down about 4% at the moment, accelerating its declines.
Yeah, it's kind of interesting. A bunch of software players, if you will, infrastructure and otherwise. Autodesk up 6.5% in the aftermarkets. We're seeing Splunk also move up higher in the after hours. Up, let me just pull it up real quickly, up about 6% as well. And of course, we're waiting for NVIDIA, which should be out in about 13 minutes from now. And I know you guys are going to be all over it, and as we will as when it breaks and crosses the Bloomberg. All right, that's a wrap. A lot going on again on this Wednesday. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We'll see you again, folks. Same time tomorrow.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
All right, as we said, there's a lot going on right now, and we did want to get to a story that a few hours ago, crossing the Bloomberg, there was news that the Wagner Mercenary Group founder Yevgeny Prigozhin was listed among passengers on a private jet that crashed in Russia's Tver region today. This was reported by Interfax, and it cited the nation's aviation authority. I have to say, when it crossed in the Bloomberg, crossed the Bloomberg earlier, we all kind of in the newsroom were like, wait, what? It was certainly something that caught our attention.
With more, we have Sylvia Westall, Bloomberg News managing editor for economy and government news, Russia, Africa, and the Middle East. She joins us on the phone from Johannesburg this evening, middle of the night for her. We appreciate you doing this, Sylvia. What was your first thought when you saw this news crossed? And give us some context. I think a lot of people first heard about him just a couple of months ago when he led that attempted coup.
That's right. So, this happened, almost exactly 2 months since this attempted mutiny against Putin. And then, it seems that Putin and the Wagner Group chief came to a sort of understanding in which, that was over and things seemed to have quietened down. And then he was back and forth. He was in St. Petersburg. He was actually going to see Putin. And it was a very strange scenario in which there had been this big drama of this march on Moscow and then some sort of deal in which they sort of went their separate ways. But now we have these reports, and it's still very unclear exactly what's happened. And you're right. What we know for sure, based on the reports and what we're seeing in reports on Interfax, is that he was listed on a jet that crashed as it traveled from Moscow to St. Petersburg. The state-run TASS news service says all 3 pilots and 7 passengers aboard the plane are dead, but there is no confirmation of his death and certainty that he was actually on board that plane, even though he was listed on it.
Sylvia, just crossing the Bloomberg from TASS News Agency is that Prigozhin was on board that jet that crashed. They are saying he was. Help me out, though. TASS, is it an arm of the government?
Do we trust it?
Do we trust it?
Sure. I think we've just sent that. We've sent it as a red head on our terminal. So this is the state-run. We're taking this off state-run media. So and we've seen sort of various reports building to this. So we know. So we are taking that now that he was actually on board that jet that crashed. Of course, this isn't saying that he is definitely dead, but if we look at all the different information around it, it was a deadly crash. So I guess now, looking forward, there are questions about what signal, is this sending, any information around how this happened, what it means for the future of the Wagner Group and in Russia as well.
Well, how should we read this? I'm thinking of the public who are seeing this. I think a lot of us, when this first happened, the uprising, if you will, and the march on Moscow by Prigozhin, that we thought, oh man, if it doesn't go the way he wants it to go, he's kind of got a target on his back. To be quite, people were saying this, right, and making that conclusion. But what does it mean about Russia and also the relationship that the world has with Russia? Does this change it?
I think in terms of this, I think it would be unwise to kind of speculate at this point about who is behind it. Obviously, I think we can say for sure that his attempted mutiny was the biggest sort of threat to Putin's power for a long time. It was a really important moment for Russia and a kind of a turning point in that sense. So I think that's fair to say that he is definitely or was definitely a figure that was being closely watched. But had a very sort of complicated relationship, and his group. It'll be interesting to see what happens to his group. After all of this, because it obviously has operations beyond Russia as well. It's obviously involved in the invasion of Ukraine. It had operations spreading into Africa, and part of the understanding with Putin was that those operations would continue. I think in terms of Russia's relationship with the world, I think we've already seen that U.S. officials have come out in public to sort of talk about this being an expected step. I think just going forward, I don't think it really. I guess the main way in which we think about Russia's relationship with the international community is what's happening in Ukraine and whether there are any possibilities of a breakthrough there, whether that's diplomatic or whether there's any side moving or not. I don't think we can kind of pin that down right at this moment, and it's more about what's happening in Russia internally and how it affects Wagner Group operations abroad.
No, really well said. And we so appreciate, we know it's late where you are, and so appreciate you staying up for us. Sylvia Westall, Bloomberg News Managing Editor for Economy and Government News on Russia, Africa, and the Middle East, joining us from Johannesburg. Having said that, our next story also deals with Russia. It is a most read on the Bloomberg. Today's Bloomberg Big Take, meaning our Bloomberg editorial team, have deemed this story something we all need to be aware of and a priority. It's about how Russia's invasion of Ukraine is forcing the U.S. and Europe to search for alternative sources of enriched uranium to power their nuclear reactors.
Yeah, who knew? I did not know this before seeing the Big Take. That currently about half of the global supply of enriched uranium actually comes from Russia, an uncomfortable reality for leaders in the U.S. and Europe in the wake of Moscow's invasion of Ukraine. The reporting team who wrote it, it's a big team. We got Jonathan Tyrone, Will Wade, and Francois Debapi. Bloomberg News Power and Renewable Energy Editor Will Wade joins us in our Bloomberg Interactive Brokers studio right now. So we'll take us into this. What is this? What is this uranium used for, and why do we rely on Russia for it?
Well, it's very simple. This is the fuel for nuclear power plants. You don't have your enriched uranium, you don't have nuclear power. And over the past several decades, I mean, the process for enriching uranium was invented in the United States. It was part of the Manhattan Project. And we had to enrich uranium to make nuclear weapons, but the same process is used for making nuclear fuel. But in the past several decades, we've sort of gotten away from making as much of it, and Russia became the biggest supplier in the world. It wasn't really such a big problem until about 18 months ago, when they invaded Ukraine, and the rest of the world suddenly started to be really concerned about relying on Russia.
We've talked about nuclear power with you. We've talked about all kinds of power with you as we kind of figure out, you know, in a climate change world and challenged world, if you will, you know, where we need to be kind of focusing efforts or where efforts are being focused. How much, like, what is going on with nuclear power in the U.S. specifically?
Nuclear is having a real renaissance. And in the past 18 months, I've seen just an enormous change in public opinion. People are really starting to recognize that nuclear is the biggest source of carbon-free energy. Well, hydropower is really big too, but nuclear is the one that gets a lot of attention. You can build nuclear power more easily. It's hard to create new rivers.
So when it comes to enriched uranium, how quickly can we ramp up?
Oh, it's slow. Everything in nuclear happens really slowly. So I did go to this facility in eastern New Mexico. It was a really hot day last month. They're the only place in North America that does this for us. And it's not even an American company. It's a unit of a European consortium.
I was so surprised they let you do this. I mean, this is a heavily armed facility.
I was surprised they would let me do it too, but when I called them up, they were like, please come.
So describe what it was like there and what goes on inside this building, and also how you get in.
There's guards. There are multiple layers of security. There are quite a few people with automatic weapons walking around, but, you know, they keep a low profile unless they're needed. They don't generally, you know, need to use that force, but it's there. It was, you know, I've been to different industrial facilities. This thing was spotless. I was amazed at how clean it was. They had machines that like were bright and shiny. They looked like they came out of the box yesterday. They've been running for years because it's, you know, it's a very precise operation. They took me into the centrifuge room. The centrifuge is sort of the key technology, and they just have rows and rows of these things. They're about 1.5 feet across, maybe 25, 30 feet high, and they're just lined up, boom, 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 rows and rows and rows and rows and rows, and they spin this gas, uranium hexafluoride, and they spin it to concentrate the specific uranium isotope that you need for nuclear power. It's uranium-235. And they just have to concentrate that until it's the level that's needed. It's about 5%. And the reason it's so secure is this is the same process you would use for making weapons grade, except you'd have to keep spinning it till about 95%.
So listen, we only have 30 seconds, and we apologize because we had to do some of the other breaking news. But what was your takeaway from doing this and especially as we think about maybe the demand we're going to need, and it's the more increasingly complicated relationship with Russia. And just got about 25 seconds.
The takeaway is that there is a really strong push in the United States and Europe to get away from relying on Russia, so they are making an effort to recreate the nuclear fuel cycle outside of Russia. I think it's really going to happen. I think it's going to be slow. I think it's going to be expensive.
You know, we talk so much about like alliances being rebuilt, whether it's because of kind of the pushback against China, the pushback against Russia, and it does sound like, and you cover it in the story, about the alliances that are going to be needed, right, to do this.
Yeah, it's a truly global effort.
All right, going to leave it there. Thank you so much. We really appreciate it. Go to Bloomberg.com, check it out. Will Wade is Power and Renewable Energy Editor at Bloomberg News. Check him out at Will W. Wade on Twitter, or X, whatever you call it. That's the big take.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. A blowout quarter for NVIDIA with the stock after hours now up by 5%. NVIDIA's second quarter data center revenue, $10.32 billion. Estimates there, $7.98 billion. Headlines right now as the numbers cross on the Bloomberg Professional Service. NVIDIA sees third quarter revenue in the range of $16 billion, plus or minus 2%. Now keep in mind that estimates were for $12.5 billion. NVIDIA also approving an additional $25 billion in share repurchases. Again, the headlines right now on the Bloomberg Professional Service. NVIDIA up 7.8% after its third quarter revenue outlook beat. It turned out to be an up day on Wall Street ahead of those NVIDIA numbers. The Dow, the S&P, and NASDAQ all rallied today with the S&P 500 index up 48 points, a gain there of 1.1%. The Dow today up 184 points, up 0.5%. NASDAQ up 215, higher by 1.6%. Again, a beat out of NVIDIA. Our coverage will continue in a moment. We'll have more on NVIDIA as the stock surges after ours. 10-year yield, 4.19%. The 2-year, 4.97%. Spot gold up $19 the ounce, higher by 1%, $19.16 on gold. And West Texas Intermediate crude down 1.4%, $78.49 a barrel. So again, recapping here, an earnings beat, blowout numbers out of NVIDIA. I'm Charlie Pellet. Our coverage continues, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. The race is on to adopt generative AI. That is in the press release from the founder and CEO of NVIDIA, Jensen Huang. He also is saying a new computing era has begun. Companies worldwide are transitioning from general purpose to accelerated computing and generative AI. That stock, as Charlie just mentioned, continuing to build momentum to the upside in the after hours, up 7.6%. That buyback news and third quarter revenue outlook beating the forecast. I mean, growing into that valuation, perhaps.
Yeah, this is a blowout quarter for the company. Shares up 7.8% after third quarter revenue outlook beat. The company approving an additional $25 billion in share repurchases. With a look at the quarter and the outlook, we got back with us Dan Morgan, Senior Portfolio Manager at Synovus Trust, joins us on the phone from Atlanta this afternoon. Dan, you've had 3 minutes to look at this. Initial reaction.
Carol, I mean, again, this is just a huge quarter, total blowout number. What gets me is that third quarter guidance of $16 billion. The street was at $12.5 billion, and then there was a whisper number out on data center that said that they got to do better than $10 billion, even though the street was around $8 billion, and they did $10.3 billion. So, again, Tim and Carol, this just gives further evidence that AI, generative AI chip demand continues to be extremely strong. And again, NVIDIA has been the poster child, right, for substantiating AI.
You know, it's so funny. I'm going through the press release and I'm like, oh, yeah, they do chips for gaming. Oh, yeah, they do automotive.
I mean, they've been around for years.
But our focus is so much AI. Help us break down the business of what it is and where the growth is. Is it all the AI growth?
Yeah, I mean, Tim and Carol, if you look at their data center group, it's projected that about 65% of the overall demand comes from generative AI. So that's what's really pushing that number. And, Carol, you even mentioned earlier, I mean, we used to talk about NVIDIA as a gaming company, right? With their GPUs and all the great gaming chips they had. And then they just started working into the same sandbox with AMD and Intel in the data center area for cloud. And now they've just gone and done a fabulous job in terms of the chip portfolio that they're offering in that space. And obviously the demand is extremely high because they blew these numbers away again.
Hey, I want to be smart here, though, because we all get heady when it's like, oh, my God, look at what they're doing and how much their big beat. Should we be heady here? One of the things that we keep questioning is we had on a guest earlier who said, great company, bad stock, meaning it's overvalued. What is it in this release, an outlook that says, well, maybe it's not overvalued?
I think, Carol, everyone that talks about the stock being overvalued is basically looking at trailing PE multiples, right? Or they're looking at price to sales, which is about 40 times. But you look at the forward estimates for, let's say, fiscal year 2025, which are going to go up after this release. They were around 10.5. you're trading at 38 times earnings. I mean, that's not excessive. You got to remember, we're already halfway through fiscal year 24 for them, right? We're going into the third quarter, so we've got to always look ahead. So I think if you look at the stock as on a forward multiple basis and you factor in the tremendous year-over-year growth that they're getting right now and the momentum that they're getting on this quarter-to-quarter basis, the stock to me doesn't seem that excessive when you compare the growth rates to the multiples.
Why the heck are they doing a buyback? $25 billion in share repurchases because they can? Because it makes sense?
Yeah, I saw that, Carol. It's kind of funny because, usually when you've got enough free cash flow for a buyback, you might go out and buy somebody.
Right, right.
And why do you need to buy shares back if you're not a value stock, right? A company trying to generate higher earnings per share by lowering the denominator in the number of shares. So they're basically saying, hey, we're bullish on our own stock. We're going out and buy it, so we're going to do a buyback. So we don't care about what you say about the trailing multiples.
I mean, I can't get over this quarter. Expectations were high, and then they come out and they say, seeing third quarter revenue, $16 billion, plus or minus 2%. Estimates were for 12.5%. Data revenue in the second quarter coming in at a record. 10.32 billion, Carol, versus estimates of 8 billion.
It makes me wonder, all right, help me out here,
What
Dan.
did analysts get wrong?
Exactly.
That's my question.
They have a hard time figuring out this one. Why is it?
I just think the fact that they are one of the sole companies at this point that have really shown a tremendous amount of growth related to AI. And I think that everybody wants to doubt the company. I'll be honest with you, Tim and Carol, you and I, Carol, we've been doing interviews on NVIDIA for years.
Yeah.
And it's almost like this earnings report to me kind of felt like a carnival atmosphere. It's like everybody knows about it, so it's just kind of interesting, the spotlight coming on them. But as Tim was saying, they blew out on all the matrix everybody was looking for. So I try to find someone who can, throw a dart at this one.
I still think about our conversation, Tim, with Ira Jersey. Was it yesterday or the day before?
Yeah, the day before.
We were talking about, he's our interest rate strategist here at our Bloomberg Intelligence team, and we're talking about Fed and Jackson Hole and blah, 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 and moves and yields and so on and so forth. And he's like, he had a conversation, was it on one of our blog or one of the blogs that was about interest rates, right?
Right.
And what came up?
Well, I'm also talking about the idea that, it's a macro story, and Ben Emmons coming out and saying that NVIDIA is, this is like a macro company. This is more important than Jackson Hole.
But here I'm saying, right, our interest rate guy saying that in the conversation about interest rates,
that's right, he was doing a chat,
comes up NVIDIA.
Like everybody's talking about it.
So that's why I want to be smart here, Dan. So what is the smart question to ask the CEO and team on the call to make sure we're not missing something or getting too irrationally exuberant?
I think, Carol, the biggest question coming in this quarter that everyone was worried about, and we've talked about this before, is terms of constraints related to their supplier, right? TSMC. There were worries that they wouldn't be able to make enough chips fast enough to meet consumer demand from NVIDIA. So, again, that's probably going to come up on the conference call that, is there any doubt in your mind, Mr. CEO, that you will not achieve the $16 billion target in the third quarter because of potential constraints related to TSMC? I think that's probably what's going to come up as being a worry point if we can find one here, Carol.
Are there any worry points about supply?
Well, I mean, there were concerns. I've heard people talking about packaging issues that might hurt them and so forth.
Packaging issues? What do you mean?
Yeah, I mean, that sounds very strange, right? After what we went through the last 2 years about, supply constraints in the chip industry. You just hear different things, but that's been the vocal point, Tim, has been on TSMC. Can they build the chips fast enough? Can they fill the demand and meet that target? And I think that'll probably come up.
So this also shows that maybe people who initially went through a buying cycle and maybe they've gotten them, but we're still continuing to see people one up and continue to buy, correct? Based on these results and this outlook?
Yeah, it looks like that's a fact, Carol. I mean, the demand was better than what they had projected a quarter ago, right? Because they came out and gave that lofty number at $11 billion in terms of sales on this quarter. Of course, they crushed that, and then they upped it again. So obviously, they're feeling extremely strong about their business.
One quick last question. Do you buy here? Because people are buying in the aftermarket. Would you be buying because you think it's going to go even higher or no?
Well, Carol, as you know, we've been in NVIDIA for a very long period of time. It's kind of like Apple, and it is on our buy list. It is a stock that we would buy for clients that had the proper, risk tolerance and objective. So it's obviously based on individuals, but pretty much most of our clients already own it. So, it's kind of, future.
We're there already.
Yep.
Dan Morgan, you are a gem. We know it's a busy afternoon for you, so thanks for always finding time for us. Dan Morgan, he is Senior Portfolio Manager at Synovus Trust, really a go-to for us on names like NVIDIA and others, joining us on the phone from Atlanta. We really appreciate his input.
Yeah, let's recap the numbers here, Carol. Certainly worth repeating. NVIDIA forecasting third quarter revenue of $16 billion. Plus or minus 2%. The average analyst estimate was for $12.5 billion. Siege adjusted gross margin 72% to 73%. Again, beating estimates. Those were at 70.5%. Siege adjusted operating expenses at about $2 billion. Estimates were for $2.05 billion. In the second quarter, revenue came in at $13.51 billion. The estimate was for $11.04, and that's up, Carol, from a year ago of $6.7 billion.
Yeah, I mean, the stock's
huge
up,
top line growth.
Stock's up 7.7% in the after hours. This is the number one performer in the S&P 500 this year by a mile. And as Tim just broke down the numbers, net giving an upbeat revenue forecast for the current quarter, and it's fueled by surging demand for its AI processors in data centers. And then there's that $25 billion share repurchase, and they're going to continue to do share repurchases this fiscal year.
Let's get to world and national news. Nancy Lyons is in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Interfax and the Russian news agency TASS both say Wagner chief Yevgeny Prigozhin was on board a private jet that crashed today. He was the man who marched on Moscow 2 months ago in what was called a mutiny. Congressman Seth Moulton serves on the House Armed Services Committee. He tells Bloomberg Sound On he's not surprised by the news.
We all expected that he wouldn't last long after threatening Vladimir Putin. And some people said, he'll survive a year. Some people said less than that. But there's no question that Putin's out to kill his rivals. And it sounds like that's exactly what he's done to Prigozhin today.
Congressman Seth Moulton on Bloomberg Sound On. It's go time for Republican presidential candidates on the road to 2024. GOP hopefuls take the debate stage tonight to make their case to voters. Former President Trump opted not to participate, but his presence still looms large. Bloomberg's Anne-Marie Hordern on what we can expect.
To get to the primary, these individuals are going to have to show that they are as far right as they can be, right up against the former president to get that primary vote. But then, if they are the ones that become the nominee, they then need to really start to move more moderate.
Bloomberg's Anne-Marie Hordern. The debate airs on Fox News at 9 p.m. Wall Street time. The latest defendant to turn himself into Fulton County authorities in the Georgia election case is former New York City Mayor Rudy Giuliani. After being booked, he spoke with reporters about the case that's brought by District Attorney Fani Willis.
Fani Willis will go down in American history as having conducted one of the worst attacks on the American Constitution ever when this case is dismissed.
All 19 defendants, including former President Trump, have been given a Friday deadline to surrender. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here on Bloomberg. Big news after the bell. NVIDIA, that stock after hours, now rallying by 8.4%. We're watching the story for you. We did hear from NVIDIA. It has become a standout in the tech industry's race toward artificial intelligence computing. And moments ago, it delivered another stunningly strong quarterly revenue forecast, fueled by surging demand for its AI processors in data centers. Again, after hours, we do have NVIDIA shares surging now by just about 8.7%. Reaction to NVIDIA's quarter from Dan Morgan, Senior Portfolio Manager at Synovus Trust, who was interviewed moments ago right here on Bloomberg Business Week.
You got to remember, we're already halfway through fiscal year 24 for them, right? We're going into the third quarter, so we've got to always look ahead. So I think if you look at the stock as on a forward multiple basis and you factor in the tremendous year-over-year growth that they're getting right now and the momentum that they're getting on this quarter-to-quarter basis, the stock to me doesn't seem that excessive.
And again, you can hear more of the conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, after hours, NVIDIA up now by 8.7%. The Dow, the S&P, NASDAQ all advanced into the NVIDIA report today, with the S&P 500 index up 1.1%. The Dow up 0.5%, higher by 184 points. S&P, by the way, now at 4436. NASDAQ up 1.6% today, and we had the 10-year yielding just about 4.19%, with a 2-year 4.97%. Spot gold up 1% to $19.15 the ounce, back above 1900. West Texas Intermediate crude retreated 1.4%, $78.52 a barrel. So again, recapping here, big numbers out of NVIDIA after the close of trading, with the stock now up by 8.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, it may feel like we still haven't recovered from the election of 2020, Carol. After all, Rudy Giuliani just this afternoon surrendered in Georgia and was released on a $150,000 bond. That's where he faces a deadline to surrender on charges that he conspired to keep former President Donald Trump in office after he lost the 2020 election.
Yeah, exactly. He did, but he did call the case a travesty in some broadcast remarks. All right, despite this, the election of 2024 is already in full swing. With the first Republican debate tonight in Milwaukee, Wisconsin, it'll be another crowded stage. 8 candidates will be there, but one very notable figure will not. And we're talking about the former president of the United States, Donald Trump. He also, by the way, has until Friday to turn himself in on charges of illegally conspiring to reverse Joe Biden's 2020 victory in Georgia. There's a lot going on politically, and we've got a great voice, Tim, on all things politics and elections.
Yeah, Mark Penn is chairman and CEO of Stagwell. It's a publicly held $1.3 billion market cap marketing strategy and communications firm. It also owns the Harris Poll, which Mark is chairman of. In politics, Mark was an advisor both to Bill and Hillary Clinton, as well as Tony Blair, and also met with President Trump while he was in the White House. Mark joins us on Zoom from Washington, D.C. Mark, how are you?
Good.
It's good to have you back with us. Well, I want to start with what's happening in Georgia, what's happening tonight. How do the Republicans, the 8 Republicans facing each other tonight, how do they set themselves apart from the man who's not there, the man who they're all trying to beat, former President Donald Trump?
Well, look, I think the most important for them is just to act like adults. I think that people are looking for a different kind of leadership. I think the winning candidate is going to show strength, composure, understanding the issues, and understanding of the problems that people are going through.
Wait, hold on. You're saying the winning candidate of tonight or the winning candidate of the Republican primary is going to show those qualities?
Well, the winning candidate of tonight.
Okay. Because I don't know if President Trump embodies the qualities that you just described.
There's a primary going on to be the opponent of Donald Trump, right? And so right now there are 8 candidates who are kind of vying to oppose Trump, and whether or not they're going to be able to beat Trump, I think they're more likely, if they consolidate around one, more likely than not they will. But that's certainly a toss-up race. But I think this first primary is who is really going to be the Trump challenger, and how are they going to pick up steam tonight? I don't think it's going to be by attacking their opponents. I don't even think it's going to be by attacking either Joe, they'll do some perfunctory attacks on Joe Biden. And I don't think it's going to be necessarily attacking Trump. It will be showing that they are real adults who have strength and leadership capabilities and can understand people's problems.
Hey, Mark, as a businessman, as an investor, I do wonder what kind of candidate do we need from the Republican Party? Really, what kind of candidate, what kind of individual do we need in the White House right now that would be, yes, good for businesses, which are important to a strong economy, but really more broadly good for Americans because, healthier society, healthier individuals, healthier business environment. I mean, that leads to good economic growth and is just good for everyone overall. So what kind of individual do we actually need in the White House today?
Well, look, people want, and they have wanted for almost 2 decades now, since I worked with President Clinton, they have wanted someone who would bring the country together and not really, I think, cater to the partisan divides of the country. I think that is the number one thing that people have been looking for a very long time, and which they've gotten a number of candidates who said they were going to do that, and then ultimately in the end didn't. Since when I worked with President Clinton, we sure did. I think from a business environment, people are looking for growth without inflation. They are looking for a return to middle-class values, meaning lower energy prices, lower interest rates on their mortgages, healthcare costs that they can manage, better education for their kids. People are really looking for the fundamentals and the basics here. Of course, there's immigration and crime that are additional issues, but it's these costs of middle-class life, food, housing, gasoline, that really are weighing on the voters and that are really the number one issue before the voters in this electorate.
Do you see the voters coalescing, the Republican voters in the Republican primary coalescing around anybody apart from former President Trump?
I think they're going to. I don't know which candidate it's going to be, but even if you look in Iowa, Trump is polling at 42 in the poll that was done. That means there's 58% of the Republican electorate in Iowa that wants somebody else. They just don't know who they want. They know who they don't want.
That's interesting.
Yeah, it is interesting. And I do wonder, when you look out at the outlook, it is an interesting time. We're debating whether or not we need to just get woke with inflation, if you will, in terms of maybe it needs to be a higher rate. Maybe that's the realistic level going forward. Maybe we need some resets because we're coming off the pandemic and things are different. Geopolitical alliances are different. How do you see the outlook?
The outlook for?
Just kind of our business environment, our economic environment, our market environment.
Look, the environment has always been shaped by 2 incredibly powerful forces, technology and globalization. I think you're on the eve of another wave of technology that is going to significantly lower business costs. That is the adaptation of AI. We see it in our business. We see it in how we're adopting it. We see it as how we're bringing it to clients. In terms of globalization, there has been something of a pullback from globalization. I think an increasing of barriers, a growing kind of sense of global tensions, no question about that, particularly with China and Russia. And so it's unclear whether globalization will continue to drive prices, down. But when you look at the outlook, those are first and foremost, above our politicians, the 2 critical drivers. And then you have regulation, taxes, and kind of what government industrial policy is. And I think all those are up for grabs in what is a 50-50 country. And so there's a lot of potential directions here which the country could go in, which frankly, it's too early to call.
Yeah, first steps, though, maybe beginning this evening. Hey, Mark, nice to get some time with you. Chairman and CEO of Stagwell, as we said, publicly held marketing strategy and communications firm. Mark joining us on Zoom from the nation's capital. Carol Massar, Tim Stenovic, this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. NVIDIA shares surging after hours, up now by 8.2%. NVIDIA, which has become a standout in the tech industry's race toward artificial intelligence computing, delivered another stunningly strong quarterly revenue forecast fueled by surging demand for its AI processors in data centers. With more on the story, here's Bloomberg's Ed Ludlow.
I mean, if there were any jitters or pre-concerns about supply, there's no evidence that there's any impact on the supply base at all. Really strong outperformance in the data center business. You also have to go to the outlook for the fiscal third quarter straight away. Revenue expected to be $16 billion, plus or minus 2%. The average analyst estimate for third quarter revenue was $12.51 billion. What we were worried about potentially was that there would be supply constraint in the quarter just gone, the fiscal second quarter, with sales deferred to the upcoming fiscal third quarter. No evidence of that at all.
And again, we do have shares of NVIDIA after hours. They're up now by 8%. Peloton Interactive delivered a weak revenue forecast for the current quarter, signaling that a turnaround effort under CEO Barry McCarthy is bogging down. The stock was bogged down today. Peloton shares plunged 22.6%. And Foot Locker plummeted after cutting its full-year forecast and reporting results that fell short of expectations. FL on the ticker. Foot Locker down today by 28%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenivek live in our Bloomberg Interactive Broker Studio.
Let's get a check on the latest world and national news. For that, we go to Nancy Lyons. She's in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. A private plane has crashed outside of Moscow, and the Russian Aviation Agency says among those killed is Wagner chief Yevgeny Prigozhin, who attempted a mutiny at the Kremlin earlier this year. Sam Green is a professor of Russian politics at King's College in London, and he's also director of the Democratic Resilience at the Center for European Policy Analysis. He tells Bloomberg it's too early to call this an intentional act.
He mounted what is very difficult to describe as anything really short of a coup. He did, of course, say that he wasn't going after Putin. He was going after Putin's defense minister. But you don't really, attempt to hand the president the head of his defense minister on a silver platter without sending the message that, look, Mr. President, you're not really in charge. And so that kind of activity, right, was the kind of thing that we would have expected to make Putin very angry.
Sam Green says it's unclear how this will be perceived on a global scale. Former New York City Mayor Rudy Giuliani turned himself into authorities in Fulton County, Georgia today. He's among the 19 people, including former President Trump, who've been indicted on racketeering charges for allegedly trying to overturn the 2020 election. Giuliani says he's confident the case will clear his name. Trump plans to turn himself in tomorrow. Republican presidential candidates will be showcasing their agendas tonight in Milwaukee for the first debate of the 2024 campaign. 8 candidates will be on the stage with Ron DeSantis and Vivek Ramaswamy at the 2 center podiums. If you plan on calling in sick tomorrow, you may not be alone. A recent study by the firm Flamingo that helps companies manage employee absences says August 24th is when American workers most often tell their bosses they simply can't come into work. It's unclear why that day is so special. The next day with the most absences is February 13th, which is easier to explain. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Tim Stenivek and Carol Massa were live in the Bloomberg Interactive Broker Studio in New York. Carol, I cannot get past NVIDIA and what the company did in its most recent report that came out just about 40 minutes ago. A blowout quarter for the company. And shareholders are really happy right now. We have to remember this is after hours. But shares in the after hours right now are up by 8%. NVIDIA forecasting third quarter revenue of $16 billion, plus or minus 2%, beating average analyst estimate of $12.5 billion. You know, when we talk about beats, you know, it's like, okay, you know, you beat by like a couple, percentage points or, a few $1 million. This is like a beat by $3.5 billion.
Yeah, that's big numbers.
Top line growth.
So why do we care?